we're going to have another year or two of above trend growth. And I think that that's going to be something that we should be pretty encouraged about.
There's a lot of negative pressure, and one of the things that could alleviate that would be another earnings season.
We're looking at both those nominal and real yields and recognize that we truly are in uncharted territory.
I think it's really about the Fed. It's really about the Fed getting the economy to full employment.
Still, even with the growth that we've seen, real wages today are still below what they were in the 1970s.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
What a week we've got coming up for you from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 11 on the S&P 500. TK, I've got to say the week begins tomorrow.
Well, the week begins tomorrow. It's going to be a really exceptional week. Kit Hughes featured that at Societe Generale with inflation views. Mr. Powell Wednesday, Thursday as well. But, you know, the week begins tomorrow, and it's good, John, that 1 out of 3 of us on radio, it's apparent, one of us is tanned and rested.
That is very true. That tanned and rested individual is Lisa Abramowicz. Lisa, welcome back. And I have to say, if you looked at the week and heard some of the commentary about this growth scare and then looked at the price, the equity market, all-time high coming into Monday.
Frankly, that was my impression as I tried to catch up after my sojourn into the wild. Yeah, it was horrible. I can tell that you're really upset about it. I can tell that the pendulum of gloom actually slipped back to gloomy last week, even without me, so you can't really blame me for that one. I will say, though, it doesn't seem coherent, John, to your point. There doesn't seem to be the same concern in equities as they gear up for an earnings week that is expected to be a blockbuster.
133. What do you make of that, Lisa? To come back and see 133 on 10s.
I do wonder how much is technical, how much this has to do with overseas buying, and I do wonder how sustainable this is. If you take a look at analyst reports, they're still calling for that 2% yield. That's not gloomy. That's actually positive. I mean, John, people are still optimistic when you look at the Wall Street analyst reports.
Lisa, welcome back.
Thank you.
Welcome home. Go on, Tom.
You know, I just think Romaine went down in flames trying to outgloom Abramowicz, and he just couldn't do it. Lisa, what does IG and high yield say? I mean, John and I were unable to get up the quotes because you weren't here.
Well, I'll give you a tutorial in the Bloomberg terminal later on in the day. There is this feeling, though, that's confirmed when we're talking about equity markets. John was talking about the lack of confirmation of the gloom in bond markets. You're seeing the same thing in credit. Those credit spreads staying fairly tight. You're not seeing the concern about refinancing amid an otherwise a slowdown that's being predicted by Treasury yields.
Lisa with a bit of pop. This is good.
Yeah,
it's going to last 15 minutes.
43.50 on the S&P. You can really tell Lisa's rested and we're not. In your equity market, all-time highs into
Some of us
Monday.
went to sleep last night, John.
Equity futures down 10. We're not going to do football talk just yet. We're down 0.2 to 1% on the S&P. 43.50 on your S&P 500. Yields come in 2 or 3 basis points to 133. Got to touch on Europe a little bit later, Lisa, in the hour. We'll do that a little bit later too. Euro dollar 118.53. Your euro negative 0.2%.
Thank you, John, for setting me up, too, when you said that basically the week starts tomorrow. It does start tomorrow. We do have a very packed week, and today is not one of those, a rather slow day. However, there are a couple of really important things that I'm going to be watching. The UK's Boris Johnson is expected to confirm the end to COVID restrictions from July 19th. He announced this last week. I find this very interesting because there's a growing concern that, A, it's kind of unclear what these guidelines are. Do you have to wear a mask? Do you not? Is it too loose, given the fact that the Delta variant keeps picking up, and this comes amid a backdrop of the cases rising to levels not seen in months. How big of a concern is that going to be for him? Then later in the day, 1 p.m., I'm doing this just for you, Tom Keene. U.S. is going to sell $38 billion of 10-year notes anytime. I know you'll be looking at the internal dynamics of demand and supply. The idea here is, have we seen peak growth concern? Do we see that bid continue to come in, yields continue to grind lower with a strong bid for these securities? Or do we start to see people pull back and actually buy into what the Wall Street analysts are predicting, which is a 2% yield at the end of this year? Do you see that softening in the internal dynamics? And today, Treasury Secretary Janet Yellen attends a Eurogroup meeting in Brussels. She'll be talking about that 15% minimum global tax for corporations that do operate internationally. Really interesting to see, John, how much she pushes back on the digital levies that a lot of European countries have proposed foisting on U.S. companies, Google, Facebook, Facebook, the likes of the big tech in the United States, will that be inconsistent with a 15% global minimum tax? A very controversial point, and she has pushed back. Will she get more aggressive today, John?
Lisa, thank you. In about 10 minutes, we'll head down to Washington and catch up with our Washington correspondent, Anne-Marie Hordern. Tom, do you want to do football now? Or would you like to wait a couple of minutes? You'd like to do it now?
No, I got to regroup. I mean,
Okay.
I fell asleep halfway through it.
That doesn't surprise me.
Yeah, John, I don't know.
Soccer
It's
and
just
me.
such a foreign game. I tried to watch it. I love some of the 10. I thought Harry Kane's first half was incredibly strong, and then he disappeared in the second half. But, John, why are they doing penalty shots? Just let them play till they fall over.
Tom, that's just not how it works. I understand the pain of a penalty shootout. First of all, congratulations to England for getting so far. Just a highly likeable football team for the English national team, one that I don't think we've had for a long time.
Yeah,
that's going to hurt those young players to miss those penalties, but we've seen that many times before, and we've seen those players bounce back. I think of Stuart Pearce in 1990 missing a penalty, scoring in 96. Roberto Baggio missing a major penalty in 1994, coming back in 98 and scoring a penalty himself.
Yeah.
It's really tough. So congratulations to England, and they've got so much to be hopeful about over the next year or so,
John,
going into the World Cup.
It was
next
really
year, Tom.
evident that Italy was a better team. Why was Italy better?
In terms of possession, I think that comes down to Marco Verratti and Jorginho. I just think they dominated the midfield, and you saw that. And tactically, they just had the edge on Southgate. I think Gareth Southgate's put together a wonderful team, Tom. But if I was going to push back on anything, and who am I to comment? I think there is so much fantastic attacking talent in that English squad that I would like to see more of it in the next tournament. That would just be my only takeaway, just a fantastic lineup of young attacking talent, and we didn't see enough of it this tournament.
Andrew Slyman's waiting to come on. I want to get to that. But, the way I look at it, John, is Calvin Phillips of Leeds.
But he didn't get to play football, did he?
No, and he had one good kick. He and Gareth would really look together as the duo bun attack for Tottenham.
There we go. You want to do haircuts?
No, I just think, Phillips was the bright light on the field for me.
Congratulations, Italy, as well.
Was that good, John? Did I sound like I knew what I'm talking about?
Yeah, that was 5 minutes
What
of
I
just
learned
TV and radio magic.
John, the balance, and Andrew Slyman will go with me on this. The balanced cocktail for that match was a Negroni with a good British gin and the Campari on
Tom,
the side.
I figured you fell asleep not because of the game, but because of the draft. Don't worry, I knew that.
Fourth one.
Andrew Slyman joins us right now,
Thank
Morgan
you.
Stanley Investment Management Senior Portfolio Manager. Andrew, let's forget the football and look ahead to the week ahead. We've got the earnings. We've got the data tomorrow, CPI. Got Chairman Powell's testimony in the middle of the week going out to the back end. What are you going to be focused on this week, Andrew?
Well, I mean, your conversation's so entertaining. Keep going. But anyway, so I think this week, look, the reason why the market's at an all-time high is pretty straightforward. Rates are low and earnings keep coming in strong. And it's really hard to get a big correction when companies continue to beat and guidance goes up. So earnings revisions are positive, and rates, whether it's 1.25, 1.5, I just think it supports equities at these levels. So as long as that continues, that's fine. Now, if we get a very, very strong CPI print, which is coming this week, that could unnerve the market. But I think earnings are going to continue to come in. So far, it's been a continued strong earnings season.
Andrew, you and I have never seen a boom economy like this. What does a boom economy do to the two parts of the revenue line, the unit dynamic and the price dynamic?
Yeah, so on the surface, I think it would be easy to say, well, revenues will come in, but costs are going up, and that's going to squeeze margins. But so far, that scenario hasn't played out because people are passing on cost. I was with someone who owns a consumer product company, and he said, boy, our chemical inputs are going up, but we're passing it through, and our retailers are letting us raise prices. So I just think Americans are flush with cash, and we're paying the higher prices.
Andrew, it does seem like the smaller companies, though, have suffered more in their inability to pass along some of these price increases. There was actually a story in the Wall Street Journal talking about how the supply chain kinks are affecting those smaller businesses more. Does this sort of reconfirm that big tech play, the secular large companies taking over and being dominant, that is the place to go, as you've seen the shift back to that in recent weeks?
Well, yeah, but I'm not. Yes, I think long term that's a very valid scenario. But I do think it swung too far the other way. I do think, what rates went to 1.75%, it was inevitable we were going to 2. And then, Lisa, while you were gone, I hear what you said, but I heard a lot of people saying 1% on the 10-year. And so I think we've just swung in that scenario, 1%, big tech does well. I think we've run too far the other way. Some of these big techs are, stretched. They've done very well, and I think this is an opportunity to say, hey, maybe the economy is better than what recently the bond market's been saying, and maybe it's a chance to pick up some of those financials and some of the energy stocks. I think is very intriguing here.
Andrew, it's good to see you, sir. Thank you. Andrew Sullivan of Morgan Stanley. Guys, I think the question we've got to ask continuously is why you shouldn't just buy the index here. Why guess the game? Why try and be a bond market strategist in a world like this when it's so difficult, Tom, to call the bond market?
We do this with respect. It's a real Bloomberg policy. This started with Matt Winkler, that we just look at the research, John. We look at the statistics. That's really the foundation of our shop and why people watch and listen. And if you look at the statistics right now over any timeline, that is a difficult conversation.
Well, let's talk about how difficult it is right now to call the bond market, just to give people an idea. If I survey people in this bond market right now and tell them what the CPI print will be tomorrow, then ask them how this bond market will respond to that CPI print, they've got no idea right now. We're split right down the middle, Lisa. Some people might say an upside surprise will drive higher yields. Some people might say it will drive lower yields. If you can't call the bond market, how do you call the sectors within the equity market right now when apparently the yield is all that matters?
Well, but there's several different specters here. There's the idea of how much liquidity has been pumped in that I think people don't fully understand because they don't know where it's going. They don't know how quickly the money that's been created by central banks will go into the real economy versus into financial assets. That's number one. And then number two, they don't have a sense of growth. I mean, are we in peak growth scare fear time, or are we looking at a slowdown because of some of the COVID dynamics? Go ahead, Tom.
It was so nice for a week not to have this gloom.
Tough.
Parachute.
I'm not going anywhere.
Look, John, all that matters is surveillance research, and what we've come up with. You are off again
next week, aren't you?
John, what we've come up with besides, getting over Italy and England is the research that the Abramowicz offspring were not in Crete.
No, neither was I.
This for now.
I wasn't in Crete either, so there you go.
They loved Greece, but they were not in trouble.
Yeah, down 14 on the S&P to 43.46. Don't worry about it, Lisa. Equity futures negative on the S&P, positive on the Nasdaq, up about 0.1% there. Yields come in a couple of basis points, 133.26 to kick off the trading week stateside from New York. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. European Central Bank President Christine Lagarde is telling investors to prepare for new guidance on monetary stimulus in 10 days. In an interview with Bloomberg's Francine Lacroix, Lagarde also signaled that fresh measures might be brought in next year to support the euro area economy after the current emergency bond program ends. She expects that plan to last at least until next March. In Cuba, state-run media has acknowledged the outbreak of anti-government demonstrations. Cuba has faced growing hunger after its economy was hit by a slump in tourist revenue since the pandemic struck. The government blames the protests on U.S. agents and what it calls neoliberal opponents. And billionaire Richard Branson and his Virgin Galactic company have boosted their plan to begin tourism trips into space next year. Branson and 5 of his employees rocketed into space from a carrier aircraft high above New Mexico. They reached an altitude of more than 53 miles above the Earth before the plane glided back down. Flipkart's completed a fundraising round valuing the Indian online retailer at $37.6 billion. The company's main owner, Walmart, joined investors, including SoftBank, in putting in $3.6 billion. Walmart bought a majority of Flipkart 3 years ago and has been working towards an IPO for the business. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This deal will end the race to the bottom. Instead of asking the question, who can offer the lowest tax rate, it will allow all our countries to compete on the basis of economic fundamentals, on the skill of our workforces, our capacity to innovate, and the strength of our legal and economic institutions.
That was Janet Yellen, the U.S. Treasury Secretary from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market this Monday morning shaping up as follows. Your S&P down 14 to 43.46, coming into Monday at all-time highs. We are lighter, softer, lower by 1/3 of 1%. Outside of that, into the bond market, a bit again. Yields heading south by 2 basis points to 133.60. And we got to talk a little bit about Europe a little bit later. Euro dollar negative 0.2% to 118.53. Switch up the board and get to the stock at the moment. It's DD Global, down another 4.82% in the pre-market to 11.47, reporting it's had to take down additional apps in China. And this has been the story of the moment for U.S.-China relations, Tom. Just amazing to see this company tap U.S. capital markets for several $1 billion and then bang, clamp down on the regulatory basis over in China.
Well, let's pause on this quickly, John. I mean, how do the American banks respond to this? I'm not sure I have an answer.
We haven't seen, Tom, and I don't know, but we know how other companies are responding. The likes of ByteDance, reportedly, according to the Dow Jones, Lisa, according to the Wall Street Journal, they're pulling their IPO.
They don't want to necessarily tease the People's Bank of China or the China regulators to actually get involved. The concern that perhaps the U.S. could take some of their information or get access to some of their data, and China trying to prevent that, highlighting, the concern here with the capital markets.
TKDD down almost 5% at the pre-market.
We'll continue to watch that through the morning. Red and green on screen. NASDAQ leads the way with everything else a little bit red. Greg Villiers calls it a crucial week in Washington. It really begins a crucial, let's say, 6 weeks of heated debate over a set of issues. Anne-Marie Horton's eyes have glazed over, not because of the issues, but because her Italy took the trophy. She joins us right now about all that we see here on Washington as well. John, do we need to go to that? Because this headline breaking right now, John, goes right to my question for Anne-Marie. John, bring that headline in.
I think we have to bring this headline into the conversation, Tom. The EU will postpone a digital levy and a push for a global tax deal. And this is something the United States, this administration, the previous administration, have been pushing the Europeans to do, to push this to one side.
Really important, Anne-Marie. This goes right to the Richard Rubin essay in the Wall Street Journal over the weekend. I thought it was really complete about, you've got to be kidding me. This thing's got to get through Congress. I mean, it's like the League of Nations. They're not going to do it, right?
Yeah, it's the two pillars, really, that he's talking about in this Wall Street Journal sum of what happened over the weekend and what potentially could Congress get through. Maybe that 15% global minimum tax. That seemed to be what Treasury Secretary Janet Yellen was alluding to. But then that other pillar, which goes to what's going on with the EU right now, the one that's more about the digital tax, that potentially needs 2/3 of Senate approval. That would have to change international treaty. Can that get done? There are a ton of questions that lie ahead for this.
John, this is the key distinction for me. The idea of reconciliation, majority vote takes it, versus treaty, which is, I believe, 60 votes. John, that is a really difficult challenge, frankly, for any president.
It's a really important distinction. The other issue as well, Anne-Marie, is that the Europeans are still set to go their own way on a digital tax, aren't they? What can stop them?
Yeah, exactly. This is what they've been trying. The U.S. government has been trying to have them postpone this digital tax while they come up with a comprehensive 130-odd countries, OECD, to get done a more comprehensive global tax. If they go their own way, then also it's going to be much harder for this administration to push through any sort of global taxation remits through Congress. So there is a ton of questions. Also, you still have holdouts. Hungary, Estonia, Ireland, they still don't totally like this 15% minimum tax. This takes away their leverage to get companies to go to their countries.
Anne-Marie, what kind of negotiating leverage does Janet Yellen actually have, given the fact that she needs to wrangle together Congress, or frankly Joe Biden does, to get the U.S. on board, and the parameters of that are so cloudy?
Yeah, it's a very good question. Right now, the leverage they have is the global momentum. I spoke to the German finance minister, Olaf Scholz, after his meeting with Secretary Yellen, and he said the train is just going. It's going to be very, very hard to stop, given the fact that you have so many countries, even in the developing world, coming on board. But, Lisa, you go to the point that this now goes to the hands of Congress, and Republicans don't like this, and it's going to be very difficult, potentially through budget reconciliation legislation, they can get the 15% global minimum tax. But it's that other pillar that's going to be very, very difficult if they need 2/3 of the Senate to vote for it.
And Maria, I wasn't the only one on vacation last week. Senators, congressmen have been off for 2 weeks. They come back to Washington this week. How high on their agenda will be this global minimum tax rate versus the infrastructure and some of the other proposals?
Infrastructure is top of the agenda. And you guys in New York keep saying the week starts tomorrow. In Washington, the week starts today. They are landing today, and it is all about infrastructure. And part of that is also because there's a timeline. The leader, majority leader, Senator Schumer, said on Friday that be careful with your August recess, because if we don't get infrastructure done, he wants to keep lawmakers here in Washington, D.C. So that is really what the focus is going to be about, a budget resolution that needs to come before budget reconciliation. That will start to give the framework of that human infrastructure. And it's also about watching what the Senate does. Are they going to introduce the hard infrastructure, that bipartisan deal first, or go for the more comprehensive, multi-trillion-dollar human infrastructure? So it's going to be a very important week in Washington and the first of many.
We've got to cut that, Tom. 2-3 weeks down in Washington, and Anne-Marie's already thrown around the line, you guys in New York. You guys in New York. Seriously, TK, what a change.
It is a change, and it's particularly true because she hasn't lunched at Hay Adams 3 days in a row. Not that anyone has ever done that.
I'm excited for Balance of Power a little bit later. 12 p.m. Eastern Time, a special program with you guys in New York, Tom Keene. And freshly minted Washington correspondent Anne-Marie Jourdain down in D.C. This is going to be fun a little bit later, Tom.
This is going to be great. David Weston, I think he started drinking Friday when he learned this was happening. I mean, we will have fun. We will have fun too. I have no idea who the guests are, but I wanted to do a remote from Ben's Chili Bowl, but that got shut down.
This is going to happen today, Tuesday, Wednesday.
It's just an
Thursday.
extravaganza.
Maybe. I'm looking forward to it. I'll see if you can get past today. Anne-Marie Jourdain down in Washington, D.C. Anne-Marie, thank you. Our Washington correspondent with Tom Keene coming up at midday, 12 Eastern on Balance of Power.
Lots to talk about, John.
Looking forward to that.
Yeah.
That's right, Tom. Looking ahead, 43.45 on the S&P. We're negative 15 on the S&P 500. A little bit of a lift, up a little more than 1/10%. And your why can be found once again in the bond market, 133.43. Yields are in, treasuries are firmer, and that seems to set us up every single day, Lisa, for what happens in the equity market.
Yeah, negative real yields going more negative. The idea here that people are not expecting that bid to end anytime soon.
Just coming off all-time highs on the S&P 500 from New York City alongside Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro for our audience worldwide, counting you down to when the week begins in New York. For you guys in New York, Tuesday with CPI and JP Morgan bank earnings. From New York, this is Bloomberg. Live from New York City for our audience worldwide. Here's the price action this Monday morning. Good morning. Coming off all-time highs. Coming into Monday, 43.46 on the S&P 500. Just a nudge lower. We head south by about 1/3%. We head north on the Nasdaq 100 by a little more than 1/10%. The clue is in the bond market, and I'll get to that in just a moment. For the week ahead, it is about the bank earnings, and they start tomorrow with JP Morgan. Switch up the board and get to the bond market. This is your cue, the catalyst for pretty much everything that happens every single day. Your 10-year right now, 133.26. We come at about 2 or 3 basis points. Lisa went through the supply a little bit later this week. Today, I think we get about $58 billion of 3-year notes, then $38 billion of 10-year notes a little bit later today as well. Lisa went through those numbers earlier. Yields come in. We're down 3-4 basis points on 30s to 195.53. It's been a flatter curve, and that's been a challenge to the bank stocks. So look out for the earnings. So look out for CPI too. That's the big one tomorrow, and I can't seem to find a consensus, not on what the data will be, but on how this market will respond to that data. Switch up the board and finish on this. Euro-dollar just a little weaker for the euro right now. A break lower on euro-dollar to 118.52, negative about 0.2%. So we've had the guide change over at the ECB just in terms of the mandate, their interpretation of price stability. Instead of below but close to 2%, this idea that it's now just 2%. And because you've made that change, you've got to change the guidance maybe as well. That's President Lagarde speaking to Francine Lacqua over the weekend in Venice. I'm interested to see how that guidance will actually change. That meeting takes place in 10 days' time.
I'm watching the German finance minister, Mr. Scholz, says he's monitoring inflation. The Bundesbank response, the Germanic response, will be a huge deal. We have a terrific set of voices lined up to give you perspective on what clearly is an eventful July and into August. Michelle Myers with Bank of America, and long ago and far away out of Boston University, just became immediately visible in the zeitgeist for parsing American consumption and parsing GDP in our strange housing market. The strange Michelle Meyer joins us this morning. Michelle, a 9.5% GDP statistic. I want you to frame right now the Bank of America guesstimate of the path from a boom economy to a normal economy. How does that process look?
Sure. And I think that's actually the big question. People are trying to figure out what the moderation in growth will look like, because we know that 9-10% growth, which is what we're tracking in Q2, is not sustainable. So there will be a slowdown, and the data is already indicating that. But it's slowing, in a fairly manageable way, all things considered. So when you look ahead to the next few quarters, we very much believe the economy will be still growing well above trend being close to 2%. So you'll see somewhere in the order of 5, maybe 6% GDP growth on average over the next few quarters. It's half the pace that we had in the second quarter, but we can't imagine the economy will continue to grow at that type of pace given the capacity in the economy. Dovetail
Bank of America sell-side research, your securities research into what you and Ethan are doing in economics. What is the corporate response to the economy you imagine?
Well, I mean, businesses are investing. Businesses are seeing consumers go out and spend. They have cash on hand, and they were actively spending on all things goods up until recently, where there's been some slowing, and now they're really embracing the services side of the economy. But without a doubt, the consumer's out there participating in the economy. And when you see that as a company, you want to go out and invest and meet that demand. And that's very much still what we're seeing in the data flow.
That seems to be what Morgan Stanley's Chet Naya was saying also over the weekend when he says that he expects a red-hot CapEx cycle to sustain global GDP growth above pre-COVID levels. Why is that not necessarily the case as sort of portrayed by the bond market? Or in other words, how inconsistent is the bond market with some of these projections?
Look, I mean, I know the last few weeks has been all this debate around fundamental and technical factors driving the bond market, but I think beyond that, there seems to be this storyline or sentiment in the markets that, we can have really strong growth for the next few quarters. Fine. That's still part of the payback from this incredibly artificial time in the economy around COVID and the ensuing stimulus. But what's the underlying trend? What's the structural trend? Has that changed? Are we going to return to this environment of slow underlying growth? Are we going to return to an environment where demographics are still quite negative and depressing, where there's still disinflationary psychology? And I think that that's starting to kind of spook the market. You can see in the longer end of the curve.
And that's what the Fed's Tom Barkin was talking about in a Wall Street Journal article that came out this morning. He really pointed to the employment to population ratio, this sort of participation rate, as still being too low to justify tapering. How much, however, can the Fed overwhelm some of these actual economic inputs with their stimulus? In other words, do we even have to look at the fundamentals, or are the fundamentals entirely the amount of liquidity pumped in by the Federal Reserve?
Yeah, so I mean, that is the balance, right? Is that the Fed is, a heavy hand in the markets, and what the Fed is doing today in terms of buying and what they are communicating for the future in terms of forward guidance is huge, right? So, and it's not just the Fed, it's all of the central banks that are creating these types of challenges for getting a clear signal of what's happening in the bond market. But going back to your comments around what Barkin said, I think that is super important when you consider where the underlying growth rate is in the economy. It's the supply side. How much capacity is there for the economy to continue to grow? And for that, we rely on labor force participation, people going out and working, and we rely on productivity. And those two factors, I think, are super important to keep an eye on when you're thinking about the long run potential for the economy.
Michelle, looking at your latest research, on Chairman Powell's testimony, you say the following: we look for him to sound relatively more dovish than he did during the June presser. Why is that, Michelle?
You know, in the press conference, remember, he's talking on behalf of the committee, and we know from the SEP that there are 7 FOMC officials that are looking for a hike next year. So there are a lot of voices out there that we're growing kind of anxious about what they're seeing on the inflation front and wanting to get started with the normalization of policy. But we don't think Powell is in that camp of a 2020 hike. And in the testimony to Congress, we think we'll get a little bit more of a sense of that. And we also think in the testimony, he's really going to reinforce how the Fed thinks about maximum employment, which, remember, is for broad-based labor market recovery, one where the inequalities that we had seen over the last several decades could be resolved to some extent. That is still really core to, I think, what Chair Powell is trying to accomplish with this new framework.
Well, Michelle, let's get into that. I read the monetary policy report that came out on Friday, which will serve as the basis for this testimony later this week. Here's the line that jumped out to a lot of people. The post-pandemic labour market and the characteristics of maximum employment may well be different from those of early 2020. What do you think they're getting at there?
I think the idea that they have, changed the definition of maximum employment. It's not just getting the U3 unemployment rate down to, call it 4 to 4.5%. It's about getting an environment where that unemployment rate is down across the economy, where the employment to population ratio for prime working age individuals is back up as well across the economy. Now, it's not going to be perfect, right? There's going to be a lot of challenges. And at some point, you're going to really get this tension between the tightness in parts of the labor market versus the wage inflation or underlying price pressures.
Now, I know at Jackson Hole, you've pushed Ethan aside. You're going to be out there, Michelle, probably under the white tent in the lawn chairs for the Saturday speech. Are you telling me we have a central bank committing social policy now with monetary tools?
Look, it's not social policy, and the Fed will be very clear that they're not trying to, move one part of the economy versus the other, right? That's fiscal policy. But what the Fed is saying is in order to have a complete recovery, and one that we think will be able to continue because you have broad-based wage growth, because you have the ability to see broad-based price pressures in the economy, it needs to be a complete recovery. And that was the lesson that I think they learned, one of many in the last cycle that came out of the Fed Listens events, is that if you don't have the economy, increasing across the spectrum, it may end up not lasting, or you end up damaging your long-run potential even more.
I look at this, Michelle. Michelle, I'm just sort of dazzled by all the theory that's getting out. Can we go back to core values, core knowledge? How's the housing market, Michelle? I mean, this is how you became famous. Yeah. Do you believe in this housing rally or the suburb? Let's take outside New York. If I was by chance north in Westchester, and if by chance I loaded the boat right now on 1.75 million, am I going to enjoy that at 1.3 million when this natural disaster is over? Just by chance.
Just by chance. Right. Yeah. So for anybody who's moving to Westchester, no, so I think I think there's been a lot of movement. Clearly, there's been a lot of churn in the housing market. We've seen that in terms of the volumes, and part of that is because after the pandemic, people thought differently about where they want to live. That was very clear in the surveys. Part of it was because people had cash to spend if they weren't going out traveling, et cetera. So they went and bought goods. Housing is one of them. So there was definitely a distortion in the timing of the housing market, and we're still picking up the pieces from that, because you can see that the supply side was not at all ready to accommodate this big increase in demand. Quite the contrary, builders kind of froze when the pandemic hit naturally. So inventory was very low and demand just greatly exceeded expectations. And that created this big price increase. It's not sustainable. We will see, and we are already seeing demand cooling from the highs at the end of last year. We are seeing now construction start to pick up, inventory levels start to pick up. That's going to take some of the pressure off of home price appreciation. Are we going to see housing crash? No. Are we going to see a further slowdown? Yeah, I think so. And that makes sense. Home price appreciation should come off of these crazy high levels that just don't add up with what you're seeing in the broader economy.
Michelle, lovely to catch up. Michelle Meyer there of Bank of America, looking ahead to a key week with inflation data tomorrow and, of course, Chairman Powell's testimony a little bit later in the week. Talking of picking up the pieces, this is the chart I think that we've all got to focus on. The employment to population ratio gapped lower snapped back. And Tom, the improvement has just totally stalled over the last couple of months.
It is. There's a stall bit there. That's in the research over the weekend, and no question about that.
Got to have that conversation on what has happened to this labour market and the scars of the pandemic. Dr. Joshua Sharfstein on the pandemic, Johns Hopkins University Vice Dean of Public Health. He's going to be joining us next. From New York City at 43.48 on the S&P, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. The European Union will postpone its push for a digital tax on online sales. Instead, the bloc will focus on the broader deal for a minimal global tax agreed to by the largest economies. Several countries, including the US, have been strongly opposed to a digital tax. In Haiti, a new twist in the investigation into who killed the country's president. Police say they've arrested a Haitian man accused of flying into Haiti on a private jet and working with suspects in the assassination. The man was identified as Christopher Emmanuel Sanon. Police say Sanon was in contact with a security firm that recruited the suspects. The U.S. infectious disease chief, Anthony Fauci, says ideological rigidity is preventing people from getting coronavirus shots. Vaccination rates are lagging in southern and midwestern states. Fauci made the rounds of morning talk shows to reinforce the administration's position that the vaccines are safe. And Bloomberg's learned that Microsoft has agreed to buy security software maker RiskIQ. The price, more than $500 million in cash. The deal could be announced in the next few days. RiskIQ makes cloud software that makes clients understand where and how they could be attacked. And it's a hopeful sign for movie theaters. Disney's Black Widow scored the highest grossing debut for a film since the onset of the pandemic. The newest Marvel picture took in $80 million in US and Canadian theater ticket sales. Disney said Black Widow also generated more than $60 million from fans paying $30 to watch it at home. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Bad news is that we have a very nasty variant, and the good news is that we have a vaccine that works against it. That's the reason why we're very concerned, is that we have some sort of a schism between some states and some areas that have a very low level of vaccination, which is really unfortunate.
Dr. Anthony Fauci there speaking on ABC's This Week over the weekend. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action this Monday morning after 3 straight weeks of gains. Given the commentary, would you believe 3 weeks of gains at an all-time high on the S&P 500? 43.46, we pulled back 14. We're down about 1/3%. Outside of that, firmer bond market again. Yields heading south, down 2 basis points. 133.76. Going into CPI tomorrow and bank earnings. The Nasdaq firmer. Tom, the Nasdaq 100 up 0.2, we advance about 28 points.
Yeah, I'm watching the VIX, John, just as a general indicator into earnings season. 17.38 out of stick, and, you know, that's fine, but it's not 16, it's not 15, but nevertheless, as you mentioned, record highs coming in Thursday and Friday as well. Right now with an update, Joshua Sharfstein, Johns Hopkins, and Professor Sharfstein, I just really wanted to go to what came up not once, not twice, but 3 times this weekend. Fauci says there's a schism in America. It's a division, a split, a rift, a breach, a rupture, a break, a separation. What do you do on the Delta variant if you're in a part of America that's 70% vaccinated?
Well, there are parts of America that are 40% vaccinated or 35% vaccinated, and those are the parts which are now seeing not only an increase in cases, but an increase in hospitalizations due to the Delta variant. So, you know, it's like, here we go again in those places. And, you know, it's really important to be vaccinated there. But more generally, it reflects a big problem that we're having, having people ready for the vaccine.
I get that, but what do we do in the parts of the country that are 60, 70, or even more percent vaccinated? Do we just go on with our lives, or do we have to amend our lives because another part of America is down at 38%?
Well, as long as there are places that are at 38%, the places that are at 70 or 80 are going to be at risk. Now, the people who are vaccinated right now are pretty protected, but what about people who have conditions that, the vaccine doesn't work so well for them? They're immunocompromised, for example, or children, or, some particularly older adults.
Dr.
There are
Sharfstein.
risks to people, even if they're vaccinated in some cases.
I apologize to interrupt, but this is a really crucial point that I really haven't heard before. The vaccine does not work for certain individuals. How many people are we talking about?
Well, they're probably, hundreds of thousands, if not maybe a little bit more than 1 million, something like that, who have such significant medical conditions that they're just not going to react to the vaccine. It may even be more as you consider people who are on immunosuppressive drugs. We don't know exactly how much risk they're at, but it looks like they're not responding to the vaccine as well, and some people may not be responding at all. So they have to worry that they're going to come in contact with somebody who is infectious. Now, if you're in an area without very many cases, that risk is low. But as long as the virus is really spreading in parts of the country, that risk is going to be there.
Dr. Sharfstein, I think the confusion also stems from the uncertainty around what the threshold is to return to normal life. I know the United Kingdom is struggling with this as well. Does it become, as John has talked about, a public health issue when we have individuals who might suffer, but as a whole, the healthcare system is not going to be torpedoed by a flood of cases?
Well, I think it matters that, the healthcare system is going to be stable. I think that does allow for, a lot of things to return to normal. But it still makes it unfortunate for people who have to take extra protections if they're doing that because, other people haven't decided to be vaccinated. It's even worse for the people who haven't decided to be vaccinated because they're at risk for getting very sick or dying.
How close are we to an under 12 vaccine?
I think you have to wait for the studies to be done. Right now, the companies are looking for the right dose to make sure that, they have a dose that is both able to create the protection, but without, side effects. And so until we see the data, it's hard to say. Those studies are going on, and I think we'll have probably the early readouts in the next couple months.
Doctor, I still haven't got a clear read on this. Why are we vaccinating children?
Well, we're vaccinating adolescents because they can get COVID. Many of them have. They can get severe cases of COVID. They can pass it on to people in their peer group and who are older. So, the COVID is as bad or worse, depending on the prevalence compared to a bad flu season. And we vaccinate kids against flu. It's a horrible disease when kids get it severely, and they can have long COVID just like adults can.
But as you point out, we don't shut things down for the flu, do we? But we are with this. And if we are at a stage, which you just alluded to, sir, and clarify if you want to, where we can treat this as flu, why aren't we treating it as flu?
Well, I think going into the fall, we're basically going to be. We're going to want kids to be vaccinated, and they should be back in school. That's what we do for flu.
Dr. Sharfstein, where have we gone wrong when we look at the political divide that we see Republicans who are more inclined not to get vaccinated and Democrats more inclined to get vaccinated? Where have we gone wrong when it comes to messaging on a public health level, just based on the science?
Well, that's a great question, because you wouldn't imagine a political divide in cancer treatment or a political divide in how to treat your ear infection. But suddenly we have what appears to be a political divide in whether to get a safe and effective vaccine for a horrible and lethal illness. I think that the roots of that are probably, complicated, but I think it's a very bad development that the right-wing media have sort of adopted this as a political call to arms, that like if you believe in, that you don't like the Biden administration, then you shouldn't get vaccinated. And that message is just a terrible thing for public health. It's really irresponsible. People should be able to make a decision to protect themselves based on the science and the facts.
Doctor, thank you. Got to leave it there. Dr. Joshua Sharfstein there of Johns Hopkins University. Tom, on a divided America, still on a very important issue.
John, what's your take on the United Kingdom? We saw 67,000 people, including some people storming Wembley last night. What's your update? I granted you're over here in some Italian bar. I get that. But, John, what's your uptake on the oddity I read about the United Kingdom and Dr. Sharfstein's pandemic.
I'll be clear about this. This is an observation, not a judgment. What is clear that's going to happen in the UK is July 19th, things will fully reopen, Tom, and we will shift to individual responsibility in the United Kingdom, and we'll see what happens. It will be a very important case study for the rest of the world, for a country that has managed to vaccinate a large proportion of society to make that change. And that was the original goal, wasn't it? To protect the most vulnerable in society and then to turn towards individual responsibility. And that seems to be the direction of travel in the UK, Tom, for the next couple of weeks.
We will see. Now, we're going to see part of the complexities here, folks, that we're going to see. And, John, we'll be driving forward this conversation, balance of power, 12 noon today.
Looking forward to that. Tom Keene alongside Anne-Marie Hordern down in Washington, D.C., coming up at 12 Eastern. Your equity market, 43.47 on the S&P, just off all-time highs. We're negative 13 and down a third of 1%. Your clue. Your trading cue, it comes from the bond market. Yields are lower by 2 basis points to 133.76. For our audience worldwide, what a week ahead we've got for you. Right here on Bloomberg.
We're going to have another year or two of above trend growth. And I think that that's going to be something that we should be pretty encouraged about.
There's a lot of negative pressure. And one of the things that could alleviate that would be another earnings season.
We're looking at both those nominal and real yields and recognize that we truly are in uncharted territory.
I think it's really about the Fed. It's really about the Fed getting the economy to full employment.
Still, even with the growth that we've seen, real wages today are still below what they were in the 1970s.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Get set for a busy week from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Monday morning, good morning. We're down 13 on the S&P, Tom, to 43.47.
The data's really interesting, John. We're going to get a wonderful guest coming up on this to really give us some clarity. I'll get to the idea here. Something has to give. John, I look at this data screen. You wonder what has to give, and I'm watching the dollar. It is there, static. Which way does the dollar cut?
Well, you tell me where this bond market cuts. 134, Lisa, on 10s. Yields come in another 2 basis points.
I'm struck by the contrast between the GDP estimates and the real yields that keep going more and more negative. This idea that we are projecting low growth ahead, and yet at the same time, we're also hearing about the highest rate of growth that we've seen in decades. John, it does seem incoherent on some level. At what point is this just free money, liquidity, tipping the scales?
We'll find out a little bit later this week. We'll find out a little bit anyway. We get CPI, bank earnings, Tom, then Chairman Powell testimony later this week too.
Chairman Powell's testimony, we really haven't talked much about that, John. It's a 2-day testimony, and in it will be the tea leaves of dovishness. You've got to believe they're going to be reaffirmed, particularly after the Lagarde interview with Francine Lacroix this weekend.
Michelle Meyer expecting that dovishness to come from Chairman Powell. Michelle Meyer of Bank of America mentioning that a little bit earlier on Bloomberg TV and radio. Let's turn to the price action this Monday. We're set up as follows. 3 weeks of gains on the S&P. All-time highs into Monday. We're down 12 to 43.48 and negative a third of 1%. There's the move in the bond market. Yields are lower by 1-2 basis points. A break of 125 at one point last week. We're back to 134.43 on 10s. Mentioned the euro. Christine Lagarde, the ECB president, teeing us up for a change maybe in 10 days' time at the ECB meeting. Euro dollar, Lisa, 118.50, negative 0.2 of 1%.
It's going to be a busy week in Europe. It's going to be a busy week in the United States, markets and politically. It's also going to be a busy week when it comes to healthcare concerns and the COVID pandemic. We saw the numbers in the U.S. rise to the highest levels since March as that Delta variant increases. Today, the U.K. Prime Minister Boris Johnson is expected to confirm the end to certain COVID restrictions starting on July 19th, And this really highlights, frankly, to me, the inconsistency in guidelines across countries and, frankly, even across regions. And I say this after, yes, traveling in Europe, whether people wore masks, didn't wear masks, socially distanced, didn't. It was all a blur and, frankly, highly inconsistent, raising a lot of questions about what's prudent and what's possible at this point. 1 p.m., I am watching the U.S. selling $38 billion of 10-year notes. I want to see the technicals here. I know Tom is going to be watching this super closely, as he always does. The idea here is, are people starting to feel like perhaps we have gotten into peak growth concern phase? In other words, have people gone too far with 10-year yields going to where they are? Or is this the new normal? Are we reverting back to a slow growth, slow inflation narrative with the Fed continuing to pump the prime with respect to stimulus? And today, Treasury Secretary Janet Yellen of the United States attending that Eurogroup meeting in Brussels. We did hear that the European Union does plan to postpone that digital levy. How much does this push the needle? And frankly, John, how much negotiating power does Treasury Secretary Janet Yellen really have, given the fact that Congress is all over the map in what they will or will not permit?
We're about to find out, that's for sure. Lisa, thank you. I'm reminded of something that Jeff Gundlach over at Double Line would say. And I remember hearing him say it and think it's just really important, Tom. What's changed? Has the data changed, or the way that market participants behave to the data? Has that changed even more so?
We're in a massive bull market, John. You know, to bring that up and the shock of what we've done off this pandemic in the equity markets and then how it dovetails back to bonds, I think all of our heads are spinning. I don't think it's guesstimates is what we've got forward. We heard that with Michelle Meyer.
Well, let's talk about some of those guesstimates and how this market responds to them. Michael Dada joins us now, MKM Partners, chief economist and macro strategist. Mike, let's start there. What's the biggest change for you? The trajectory of the data, the change in the data itself, or how this market is responding to it?
Yeah, John, thanks for having me on. I think it's the credit market situation is very interesting and actually sort of strange. So with the rally in treasuries, there's a big focus on peak growth and then the concerns about global growth, whether it's China slowing or the variants hitting largely unvaccinated emerging markets. So there's a storyline there, no doubt about it. But consider the fact that when the 10-year yield peaked above 170 in March, more than 70% of the decline through last week was driven by real interest rates, not falling inflation expectations. That was less than 30% of it. So we have to ask ourselves, is falling real rates, is that a contractionary phenomenon related to weakening growth prospects, or is it due to something else, like a massive wall of liquidity hitting markets? And that's an important part of the story here. There's some technical aspects to this with the rundown in the Treasury General account, but the bottom line here is there's been no weakening in the high yield market since bond yields have peaked on the Treasury side, and metals prices are up on net. If you look back to the last cycle, when we saw sustained declines in Treasury yields, we were getting blowouts in credit risk spreads, in slumps in metals prices. The fact that that's not happening this time with falling real rates tells me that there's a liquidity money story here that's being overlooked with this panic about second derivatives.
Michael, you were reading my mind. Let's go to the algebra. We can only do this with Michael Darda. Back to Jude Wininsky's days, Michael Darda has led with really intelligent use of theory. Michael, the theory's broken. John Hicks would look at ISLM and go, really? LM equals KY times HI, and it's real simple. The demand for money is broken. Is the algebra broken, Michael Darda?
Tom, I don't think the algebra is broken here. A big surge of liquidity hitting the system. The Fed QE has been static, but the rundown in the Treasury General account is adding to bank deposits that's being recirculated into the Treasury market. We can see it in broad money measures. They're ripping at double-digit annualized rates going into the spring, the last data points that we have. In the fact that you've got real rates falling, but risky credit holding up. Metals prices, they've flattened a bit, but there's no slump in broad indexes of industrial metals. And so that tells me that, this is an LM curve situation, and that's not a contractionary phenomenon. It really isn't. So I think the focus here is unfortunately been on the IS curve, some fear that credit demand is weakening or that there's some kind of positive savings shock taking shape. That was last year's story. It's time to get over it.
I can't say enough, Lisa, the foundational idea there and the raging debate that is IS and LM.
Well, there's a question, though, Michael, about something has to give. What then? Are you saying that Treasury yields then have to rise materially? Because if this situation technically continues, couldn't they persist where they are in tandem with otherwise robust conditions elsewhere?
No doubt about it. Yeah, you hit the nail on the head there. So if we ask ourselves, why is the equity market at current levels? The answer is high profits, high liquidity and very low discount rates. So the question is, what is the threat to the equity market? It would be one of those variables turning. And so, sure, if we can sustain these liquidity levels and high profitability and very low discount rates, then there's no threat to the equity market. But if instead we have real rates depressed below equilibrium levels and above trend growth persisting into next year, even if it's peak growth, I mean, the second derivative stuff has gone way too far. For inflation to persist, we just need above trend growth to continue. And with that, if we get inflation persistence, then, I think we're going to have an outlook that's putting upward pressure on Treasury yields, and that could hurt valuations. So that's been our main concern. But you're exactly right with that question.
Well, Mike, let's wrap it up. We've been teeing up the week ahead. CPI tomorrow morning, bank earnings, Chairman Powell. How relevant is any of that, given everything you've just said in the last 8 minutes?
Yeah, I think the headline figures are not going to be hugely market moving, but some of these super core measures of inflation, if we think about the temporary transitory base effect excuses for inflation or the super dovish forecasts, those are relying on these median and trimmed mean measures of core inflation to stay pretty well anchored. So as we get new CPI data, as we get the PCE deflator in the weeks ahead, take a look at what's happening with median and trimmed mean numbers, because if those are pushing higher next year, then the bottom really falls out of this temporary transitory story.
Mike Dada is going to catch up, MCAM Partners Chief Economist and macro strategist.
John,
TK.
I look, and on radio, it's really hard to capture this. I mean, Dart is set up on his porch in the vineyard with like the surfboards. I mean, John, I think could you see me, John?
Oh, I can see
out there
that.
Surfing
Are you
on
thinking
South
of retiring, Tom?
I mean, I don't know. Yeah, I'm thinking. I mean,
You're having to
he's
think
down at the
about
boneyard.
it, though.
I got to think.
I'm leaning in just a little bit more, please. Just tweak the mic.
Dart
Carry
is
on, please.
Dart is living large out in the vineyard, like with 3 or 4. You think those surfboards have moved in the last 3 seasons?
I think they're there for show, Tom. Lisa, what do you make of that perspective from Mike Dada?
This idea here that there should be something that gives, that even this flood of liquidity can't offset incredible, robust growth. I love the idea that the second derivative stuff has gone too far. People perhaps overthinking themselves, which I relate to. But going forward, this is going to be the debate. Why are real yields so negative if you're talking about a more than 9% GDP right now in the United States? It does not seem coherent, John, and yet here we are.
How relevant is CPI tomorrow morning? How important is it?
Honestly, I think that it is relevant, but at the same time, it doesn't really give any insight into transitory or not.
Really not much consensus here whatsoever on so many important topics. From New York City this morning, good morning, alongside Tom Keene,
I thought there was a
Lisa
consensus you
Abramowicz.
want me out the door.
I'm
Could
Jonathan
you bring my
Ferro.
walker over on the break?
134,
my walker.
27.
Al, bring my walker
TK,
over.
you know that I'd prop you up for the rest of your life. Very happy to continue doing that. 134.10 on 10s. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The European Union says it will postpone its push for a digital tax. Instead, the bloc will focus on a broader deal for a global minimum tax that was worked out with the world's largest economies. Several European countries had already implemented a so-called digital services tax aimed at large tech companies such as Facebook and Google. The US was one of the countries strongly opposed to that tax. In Cuba, state-run media has acknowledged the outbreak of anti-government demonstrations. Cuba's faced growing hunger after its economy was hit by a slump in tourist revenue since the pandemic struck. The government blames the protests on U.S. agents and what it calls neoliberal opponents. And billionaire Richard Branson and his Virgin Galactic company have boosted their plan to begin tourism trips into space next year. Branson and 5 of his employees rocketed into space from a carrier aircraft high above New Mexico. They reached an altitude of more than 53 miles above the Earth before the plane glided back down. and a wildfire is pushing California towards the brink of blackouts. The blaze is raging uncontrollably across southern Oregon. It's knocked out 3 electrical lines critical to the stability of grids in the western U.S. California is warned of rotating blackouts, and Nevada faces a power emergency. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Now is not the right time to talk about exit strategy because we are still forcefully delivering under these exceptional circumstances using exceptional tool, which is the Pandemic Emergency Purchase Program, which I expect to last at least until March and possibly to transition into a new format after March.
The little bit at the end there that we still need to work out. Christine Lagarde, the European Central Bank president, catching up with our colleague and good friend Francine Lacqua over the weekend. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. 134.43 on 10s. Yields come in a basis point or two. Yields are lower. That means the Nasdaq 100 is firmer by 30 points, out by 0.2% into positive territory. And your equity market on the S&P, Tom, is down 0.2% to 43.50 on the S&P 500.
Watching the data here, it's a churn this morning, but a lot of good information coming up that no doubt will move the markets this week. It is a set of issues always in Washington, and this July is particularly eventful. We talked to Anne-Marie Horton about, tax policy and what we hear from Secretary Yellen in Venice on the way to Brussels. Emily Wilkins joins this morning on separate matters with Bloomberg Government. Emily, we are all boning up again on the Caribbean. It's there every 10, maybe every 12, 13 years. Haiti, and then suddenly yesterday, Cuba. Is your Washington surprised that again we look at the Caribbean?
I mean, everyone in Washington is paying, I think, close attention to what is going on in Cuba right now and talking about it. I mean, one thing that really strikes me, just from the U.S. politics perspective of this, is how Republicans made huge gains with the Cuban population in Miami, in Florida, during the 2020 election. I mean, that was an area where Democrats did not do well in. You didn't see President Biden get a lot of votes down there. It was really strong for Republicans. And the reason is that Republicans were able to really link Democrats to communists and socialists and try to sort of talk to the population down there in a way that relates back to the Cuban government. And I've already heard from strategists saying that they will be using similar strategies again this year, and to have this revolution, to have this sort of uprising in the streets, I think really speaks to how strong these feelings are against Cuba's current government.
So how does Senator McConnell of Kentucky and Rubio of Florida, some 90 miles from Cuba, how do they influence the Biden administration debate and discussion?
I think to a certain extent, the Biden administration is already paying very close attention to what is going on and what, if any, the U.S. role needs to be. I mean, at this point, foreign policy stuff is usually pretty concentrated in the White House as far as what they might move on it. At this point, there might be an opportunity for some sort of legislation to come from the Senate. But, Tom, let's be honest here. The Senate has a lot on their plate today just in domestic issues. Yeah. And there's kind of a question about what, if anything, the U.S. senators can contribute at this point to what's going on in Cuba.
Emily Wilkins, let's talk about some of those domestic issues. After a 2-week recess, and I am emphasizing that to sort of make my 1 week look less long, they are coming back, and there's questions about the momentum behind this $4 trillion agenda that Joe Biden has. How feasible is it at this point to get through with a backdrop of a lot of people expecting at least $1 trillion to sail through both sides of the House?
So at this point, everyone is waiting on Senator Bernie Sanders. He is the chair of the Budget Committee, and he is the one who is working to put pen to paper and write out the details of that $4 trillion package. We don't even quite know at this point if it will be $4 trillion. Sanders has said as much as $6 trillion, but you have moderates within the party saying that is way too high. We need something closer to $2 trillion or $3 trillion, more closer to President Biden's initial $4 trillion. And we're keeping a close eye on what exactly that is going to look like. There are lots of priorities that the progressive members of the party are pushing for in this bill: an expansion of Medicaid, stuff for immigration, a really long list of items related to climate change. But the more narrow this bill is going to be, the fewer things that are going to be able to get into it.
Emily, just taking a look at this from markets perspective, earlier in the year, people were talking about $4, $5, $6 trillion. They were talking about an incredible fiscal boost that was going to come, the likes of which we haven't seen since the New Deal. That has been pared back, and here we are talking about maybe a $1 trillion deal, and then an ambitious $4 trillion that may be pie in the sky. There is a question about whether peak growth concerns really stems from this idea that we already saw peak fiscal stimulus. Do you think that that is realistic, that basically earlier expectations have been thrown out the window and people really need to lower their expectations about what Washington will actually get done?
Whatever they wind up getting done, Democrats are, of course, going to push this as a big stimulus. That's something that can really be done. You're going to wind up hearing that message from them, regardless of the size of this legislation. And yeah, it really comes down to what is the pull between the moderate part of the Democratic Party and the progressive part of the Democratic Party. Where are those lines draw? Where does the weight land on the scale between the two of them? And, those are really questions that we have had after the most recent 2020 election. And we're really watching this debate because that will kind of show where the balance of power is within the Democratic Party and sort of who has more momentum in getting their priorities done.
Emily, the most important thing in Washington today is at 3000 Whitehaven Street Northwest. That would be the Italian Embassy. What's the social calendar look like at the Italian Embassy today in Washington, D.C.?
Well, look, D.C. tends to be a very multicultural city. I was watching the game the other night from a bar where at least half the people were for England, half the people were for Italy. Obviously, a really great a day for the Italian fans there. I'm sure there will be many festivities going forward. I know a lot of Americans who normally are not fans of soccer who were absolutely watching the game yesterday.
I think they've probably taken the day off, Tom.
Nailed that.
I think they've probably taken the day off, as they should.
Think so?
Emily Wilkins down in Washington. Bloomberg's Emily Wilkins. I'm going to let that comment slide, Tom.
Thank you.
Pretend it didn't happen.
Why are you here, John? I mean, I thought it was me and Lisa solo today.
I don't know why I'm here.
Why?
Do you need me? Can I go?
Can we just make it a bank holiday?
Sometimes I wonder, Tom. When I
John,
open
should
the
it
show
have
and you
been
and I
a
start
bank holiday
talking,
in England?
I think a lot of people took the extra day, Tom. Let me tell you that. I think a lot of companies prepared for it as well, TK. Many companies prepared for it.
Bloomberg was all over that.
People would come in a little bit later, or maybe not turn up at all, or maybe take next week off as well. Lisa's going to be out next week too, Tom.
I did not know that.
Do you know that actually Congress just had a 2-week recession?
So you thought you would shadow Congress?
Yeah, I'm basically just trying to follow the national way.
Are you returning to your constituency next week?
I'm returning to my constituency.
Where do the market bears hang out traditionally in the summer?
Actually,
what's the retreat?
I'm actually going to the Adirondacks
with
the other market bears.
That's where the market bears go, Tom, for a week.
Wait.
Lisa's constituency.
She did not go to Crete, and now she's not going to Tupper Lake. Is that what we're hearing?
That's what we're hearing, yeah. I'm not going to Tupper Lake.
Thank you, Lisa. 43.52 on the S&P. Just off all-time highs, we declined 0.2%. Here's the price action this Monday morning for you as we set things up really for Tuesday. CPI, JP Morgan numbers really kicking off bank earnings and earnings season as a whole. And then we go into Chairman Powell's testimony. Yields come in by a basis point or two to 134.27. Big conversation about what next over at the ECB. That meeting takes place in 10 days' time. Ahead of that, the euro weaker, negative by 0.25% to 118.45. And crude at 73.50.
Crisis.
Down by 1.42%. Alongside Tom Keene. Lisa Abramowicz, I'm Jonathan Ferro. Coming up next, Parag Garvey of ING, the head of global debt and rate strategy. From New York City, this is Bloomberg. Live from New York City on TV and radio, Here's the price action this Monday morning. Good morning. Equity futures 43.52. We're down 7 or 8 points and negative 0.2%. Story of last week, at the end of last week, was a really nice lift on the banks to close out the week. This morning, got to reverse some of that. It's the Nasdaq that outperforms, up 0.2% because, once again, of what is happening in the bond market. Switch up the board and get to 2s, 10s, 30s. Nominal yields coming in a couple of basis points, 1 or 2 on a 10-year to 134.43, on a 30-year to 196.65. The bank's still 7.5%, 8% off the highs of the previous month. A lot of this is going to come down to the earnings, but also where this bond market goes. Lisa Shallard of Morgan Stanley Wealth Management looking for this bond market to get a lift back to 175 from 134 right now, and looking for a continuation of upside surprises on both growth and inflation. So switch up the board and we'll have a look at a chart, and I'll explain it for our audience on radio as well. This is the supplies index for the US economy. So where did we go relative to expectations? Well, we've seen a series of downside surprises, and we seem to be back in and around zero. And Tom, if you want to see those upside surprises again to get us back to 175, in the words of Lisa Shallard and Morgan Stanley, got some work to do here.
We got to stop here, John. I'm really thrilled you bring up Lisa Shallard. The Morgan Stanley output has been razor sharp. She has been heated. You have to be in this market. And Michael Wilson, writing over the weekend, I thought said, given the back and forth and when do you get in, you got to participate.
Well, Mike Wilson also making the point, Tom, that the index level correction is still in front of us. But this inflection point where we're still trying to work things out, and he doesn't think we've really cleared the decks just yet. We've got this rotation going on. That was the start of the year, and then we've got this correction, this rolling correction, and we're still working our way through it, Tom.
Yeah, the rotation's like Lisa Abramowicz's vacation schedule.
We can discuss that later,
take
John.
digs at Lisa all day, aren't we?
I mean, honestly, come on, I expected this. I knew I was going to be talking about my sabbatical for the next 3 years.
Lisa, welcome back.
Thanks.
It's a rolling
I'm heading back out next week.
We'll talk a little bit more about it as the week progresses. Let's get you some movers. Here's Romain. Morning, Romain.
Good morning, John, and welcome back, Lisa. Taking a look at some of the individual movers on the day. Of course, the biggest volume mover on the day, well, that's Virgin Galactic, of course, space. Richard Branson, of course, for having that successful flight to the edge of space here. But once you get beyond the spectacle here, there is a business case that was bolstered by Sunday's events. Richard Branson himself talked about the backlog of orders that he has out there. The idea here that once they get through this summer, they will start taking new orders, and those orders, they're actually going to be priced above where that current order was, which was right around $250,000 per flight here. So there is a revenue case to be made here for what happened yesterday. It'll be interesting to see whether that revenue case actually matches the valuations. Right now, the valuation of Virgin Galactic sitting around $12 billion. Those shares up 6% here in the pre-market. The other big mover of the morning is AMC, second biggest volume mover of the day. That's to the downside, down by about 4% here, despite a relatively good weekend at the box office. That latest Marvel movie, Black Widow, did come out. He had about $80 million at the box office in North America, another $80 million taken in here through streaming services, and another $80 million overseas. So that's good for some of the theaters. It's also good for Disney. Flip up the board. Comcast also in the news. The Olympics are starting soon, and there's an expectation here that Comcast and its Peacock streaming service should get a nice boost from that. Benchmark raising its price target for Comcast this morning. Those shares unch on the day. Rocket Companies also getting a downgrade. Those shares moving lower here, down about 2%. A lot of talk about the mortgage companies. And keep an eye on Didi. We learned over the weekend that Didi pulled more apps from the various stores over there in China. A lot of pressure right now on a lot of these Chinese companies and the trajectory of whether they're going to be able to list here in the U.S. Tom?
Romain, thank you so much. Interesting to see where the equity markets go through the week. Again, earnings, our complete coverage. We'll do that on radio and television tomorrow. Park Garvey with us right now with ING, head of global debt and rates strategy. Park, what's your biggest mystery right now? If I don't look at so much as price dynamics, but I look at fixed income and even full faith and credit yield, what's your biggest mystery?
The biggest mystery, Tom, is why real yields are so low. I guess the simplest answer is that there's an excess of demand for bonds, and the question is why? Is it because there just is a lot of captive buyers out there, or is it because guys feel that this is a very uncertain future beyond the next couple of years, and that's why guys are buying bonds? I think it's a bit of both, I have to say. I have a lot of respect for the bond as a discount function, so you can never write off where real yields are trading and just ignore it. So that's the mystery. Where we go to is anybody's guess. It's my job to have a guess. I'm guessing that those real yields will become less negative going forward.
Yields will become less negative. The magnitude of a proposed move in the 10-year real yield, scope out the amount of move we would see there from a negative 0.96%.
Right. So it's minus 100 basis points. Look, I mean, if the U.S. economy is going to get back to decent shape, you'd have to expect a real yield of zero. I mean, that's not too much to ask. And especially as we're talking about a 10-year security, we're not talking about the front end. I mean, clearly the Fed makes the front end trade heavily negative in real terms, but the 10-year, it's got a nose for the future. It should be trading much closer to zero than it is to minus 100 basis points. I mean, look, if you remember back in February, March this year, we had a good move higher. We got up to minus 60, minus 70 basis points. It looked like we were heading there, and we've just fallen away since.
I hear what you're saying, and I think I'm on the same page as you. You've got to have tremendous respect for a market, regardless of where you think it should be, regardless of what you think it should be trading on. What do you think it is trading on?
I think it's trading on a genuine fear, to be honest. I think there is an element of uncertainty with regards to where we're going to be in 2023, 2024. Now, you could say, well, there's always that uncertainty 2 or 3 years out. But I think that's part of it. The other issue is that there is a really significant captive audience for fixed income, all the way from the Fed to international players to the crazy demand for inflation-linked bonds like we haven't seen for years. And that's been a persistent story over the course of 2021. And of course, if you buy linkers, and there aren't many of them, but if you buy linkers, it pushes down real yields, and that's why we are where we are.
Well, Bork, there are two different issues here. You mentioned a legitimate fear that bonds are trading on, that perhaps we are getting some sort of slowdown, which people have been representing. And then on the other hand, it's just a liquidity story. And at the same time, you have this inconsistency in credit markets, which are not showing any legitimate fear of a slowdown. You see those really tight spreads, record low yields across the board, a sub 2% investment grade all-in yield, which is just in defiance of history. At what point do you have to make a call? Is this legitimate fear, or is this simply a story of liquidity?
It's absolutely one of the key points right now. There's been no elevation in default risk, and this recession has been quite unusual in the sense that the classic high yield area hasn't seen big defaults. It's been the biggest outperformer this year, and certainly over the past week or so, when treasuries rallied, corporate spreads didn't do an awful lot. So that's really reassuring. It doesn't solve the puzzle, because I think one of the issues we have is that there's still a lot of richness attached to that credit arena. And but I think it goes back to the same story. There is an excess of demand over supply for fixed income, generally speaking, whether it's govies, corporates, high yield, inflation-linked. Emerging markets has done well as well this year. There's a lot of happy buyers out there, and so far it's been a winning trade. I mean, that carry trade where you just pick up a bit of yield and sit on it and hope the market does nothing has been a winner over the past few weeks, because the market has actually rallied.
Porrick, I've got to leave it there. It's good to catch up with you, sir. Porrick Garvey there, ING head of global debt and rate strategy. Your equity market this morning down 6 to 43.54 on the S&P 500. Here's the mover of the morning, away from the likes of Didi. We've got to look at space, Tom. Virgin Galactic shares up 5% after that successful flight over the weekend with Richard Branson on board.
Thank you to Brett Hudson and our team for doing a really wonderful coverage on Sunday as well. John, we'll drive forward to July 20th, our coverage of what Mr. Bezos will do. And I think just, the amount of distance into the air needs to be put into perspective. We've got 53 miles, 62 miles. Alan Shepard in 1961 was a launch of about 116 miles. But, nevertheless, it is space. But these are three different approaches.
Well, let's get into that, Tom. And then I want Lisa to comment on the business proposition here. Have they been to space? What defines going to space?
There is a line. I don't have the name in front of me. I want to call it the Lanham Index, but there is a level where you get
the common
into
line?
space. It's a common scientific theory. I don't have the name in front of me. I'm so sorry, but Mr. Bezos makes clear he's going into space. What is defined, physically into space.
Lisa, the business proposition.
I will just say, I think that it's just being able to float around, and then suddenly you feel like you can say you've been to space. If
That's
you can
what
look
it is.
down,
Zero gravity.
Zero gravity. Kieran in the control room is pointing out it's 50 miles above that line crossing into space.
Right.
That counts. It is amazing, though, to think about what kind of industry space tourism would be. There are some studies saying that it's about $4 billion going out to 2030, which isn't that much when you start thinking about how much tickets are going to. But you have to start wondering, what is the proposition?
Well,
is it just to go up and float around, or is this people moonlighting as scientists, or do you get some sort of what is it, Tom?
I think it's a hat trick of trips here. We've got Mr. Branson moving, Mr. Bezos moving, and John, we have moving from Crete to Tupper Lake. I mean, Lisa's doing this 4,975 miles. I believe, John, she'll be weightless.
Zero gravity up there.
Zero gravity up there.
The stock is positive a little more than 5%. I got this, Lisa, don't worry. Virgin Galactic doing nicely this morning from New York City. You can tell we prepared for that.
Oh, yeah.
Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. 43.53 on the S&P.
Planning.
This is Bloomberg.
With the First Word News, I'm Ritika Gupta. In Haiti, a new twist in the investigation into who killed the country's president. Police say they arrested a Haitian man accused of flying into Haiti on a private jet and working with suspects in the assassination. The man was identified as Christopher Emmanuel Sanon. Police say Sanon was in contact with a security firm that recruited the suspects. The U.S. infectious disease chief, Anthony Fauci, says ideological rigidity is preventing people from getting coronavirus shots. Vaccination rates are lagging in southern and Midwestern states. Fauci made the rounds of morning talk shows to reinforce the administration's position that the vaccines are safe. This could be the biggest jet order ever for Air France KLM. The carrier started talks with Airbus and Boeing for 160 new single-aisle planes. Air France is looking to expand its low-cost service. The contest would likely pit Boeing 737 MAX against Airbus's A320 for A220 jets. And it's a hopeful sign for movie theaters. Disney's Black Widow scored the highest grossing debut for a film since the onset of the pandemic. The newest Marvel picture took in $80 million in US and Canadian theater ticket sales. Disney said Black Widow also generated more than $60 million from fans paying $30 to watch it at home. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The United States, like other major economies, has made significant progress rolling out COVID vaccines. But we know that the pandemic is far from under control in many parts of the world, especially in many low-income nations. And as long as the virus continues to spread, we're all still at risk.
Janet Yellen, the U.S. Treasury Secretary from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Monday morning, and here's the price action. 3 weeks of gains into Monday. Just off all-time highs. We're down 6 on the S&P to 43.54. Outside of that, setting the tone for this market worldwide. The catalyst for all of the price action seemingly comes down to one thing. Your 10-year yield, 134.43. Not my view. Seems to be the view of everybody else. Yields down by a basis point or two. In the FX market, the euro negative by about a third of 1%. We're down by 0.28%. That is a weaker euro. Euro-dollar, Tom, 118.43. Your ECB meeting next Thursday. Not this Thursday.
Thank you.
Next Thursday.
And an important meeting, John. Frame it versus the last meeting. This is not a snooze fest.
We have got a new interpretation of price stability, Tom.
Yeah.
It's no longer below but close to 2%. It's 2%.
Our banner
I'm excited.
This is not.
Next week's a big one.
And we're it'll be a symmetric meeting as well.
Hold on a second. Wait.
Lisa, I'll get there. Let's have some fun.
Okay. No, we're not allowed to have fun.
Spoil the fun. Go on. Tell us. Next Thursday.
I'm the pendulum of doom.
Tell me why it's important. Tell me why Thursday's important.
It's not just the target, but that they're necessarily going to outline what comes after next March. The idea of, yes, it's going to continue the bond buying until March, but then what's next? John is here laughing at me. Why are you laughing?
I would have got there.
John,
I do think it's ridiculous, though. We've gone from below but close to 2%, and we're expecting big changes next week because they've made that move. Did you see Jens Weidmann at the Bundesbank last week, Tom?
Yeah,
having none of it.
And Mr. Scholz today, a headline across Bloomberg talking about their monitoring inflation, I thought was pithy as well.
We'll see
I do
what
want to
happens.
focus, as Madame Lagarde told Francine Lacroix, the definition of symmetric is Lisa was on vacation for the last ECB meeting and will be on vacation for the next.
She will actually. That's true.
That's symmetric
Well said,
definition.
Tom.
Right now, always asymmetric is David Wilson giving us equity wisdom. Here, David, what do we have?
What we have is the comparison between the S&P 500 index and its 200-day moving average. You know, it's been above that indicator for more than a year. So Stephen Suttmeyer over at Bank of America took a look and saw what happened historically when the S&P 500 stayed above that 200-day indicator for the entire first half. He found 34 cases going back to the 1920s when that happened.
Very cool. What
and
happened?
only 13 of them that actually managed to stay above the moving average for the entire second half. So you have the potential for some market weakness here. That's sort of his conclusion.
So I should go to cash.
I'm not going to tell you what to do, Tom. You can
Wait, I'm
figure that
already
out.
in cash, David.
You know, the triple leverage cash flow.
Got it. Thank you. Anything else you'd like to add to this?
Well, I just point out that the first half, the average was 13% higher. In other words, that's how much the S&P 500 was above this moving average. And in fact, if you looked on Friday, it was also 13% higher. So that's kind of held up. And it's just a question of, when do things kind of catch up, you might say, between where the S&P 500 is now and what the trend has been over time.
Dave, I was noticing in a Wall Street Journal article this incredible expectation for a profit increases. 64% is the expectation for the profit increase year over year on S&P 500 companies, this according to FactSet. A question about whether this is a fair comparison. Are any of the stock traders going to be looking at this comparison, or will this basically be thrown out? It is a different number, and it's really going to be versus 2019.
Potentially more the latter, Lisa. And I would point out that our numbers here at Bloomberg are also pointing to a 64% increase. What you have to remember is that for a lot of companies, the year ago earnings were depressed because of the coronavirus pandemic. That's really when it started to hit them. So it's going to be a question perhaps more of what does the second half look like? If a company has avoided making forecasts, since last year because they weren't sure how the pandemic was going to affect their business. What are they going to be saying this time around? Those kinds of issues may very well dominate the landscape in terms of the reaction to results. And one more point, again, if you look at our numbers, in the last few quarters, you've seen 80% plus of companies in the S&P 500 beating estimates in terms of earnings. So there is that potential to happen again. And, if you look at the broader market, analysts just aren't expecting that much in terms of the S&P 500 through year end relative to where it is now. That kind of fits in with the performance, in moving average terms.
We'll see it starting tomorrow. David Wilson diving into 3 weeks here of various insanities. Surveillance correction right now. John and I went to Wikipedia. The Karman line, John. Karman.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
But there it is, the Karman line. It's 62 miles, and it's different depending on the atmosphere. Like Mars's Karman line is different than our Karman line.
I think that's the internationally recognized threshold for space. 62 miles.
What it is,
and NASA it's 50 miles to become an astronaut.
Well, yeah,
correct?
there's a big debate about this. So you get your wings
Okay.
like when you were a kid on American Airlines. You used to get your wings and, you could say you flew as well. But what's important here is Mr. Bezos and his team are approaching the Kármán line where they go into space.
Right.
The light changes. There's no lift. I mean, the algebra here, John, and frankly, to great respect for our economics and finance that we take seriously here, I mean, that equation on radio, let me say it for radio, L
Please
equals
do, yeah.
0.5 PV squared SC equals mg. That's the equilibrium point
TV
where
gold.
the plane starts going down. And at the Kármán line, you got to worry about other things like orbit. So they go up, and like Shepard, they're not going into orbit.
Some people just very concerned about where the share price might be, Tom, so I'll bring that to them. I think we're up a little more than 5% on space on Virgin Galactic.
Will Amazon
this
move
morning.
on Bezos? I don't think so.
I don't think that's going to move the dial too much for Bezos.
Are we
Tom,
doing
and
okay here,
Amazon. That's a
John? I
very
mean, we're
different
covering space. I mean,
thing. Yeah, we're doing great, I promise you.
Okay.
Lisa?
I am just thinking about the fact that people want to float and people want to say they've been to space and people want to realize their Willy Wonka dreams. And, when you talk about space tourism, what is the experience they're looking for? What is the space that they want to achieve?
The view of the view of the planet.
Right. So that's what's going to count as getting to space. I just wonder if you start to move space travel to a private endeavor, what that does with respect to oversight, with respect to the public aspects. I know I'm bringing this to seriousness, but it is a really interesting issue to me that it used to be the public sector that explored
By the
space.
way, this really frustrates a lot of people, by the way. It's worth pointing out. Look, I believe it does push the threshold. We can learn new things. I think that's all really, really important. We've seen that through space exploration for decades. Tom, there's other people that look at this and say, we've got enough problems on this planet right now, and these are guys with a serious amount of money that aren't doing enough about them.
Well, what they would respond with is a layout of their charities and what they've done over the years. I think Mr. Bezos under unique pressure. I should point out, John, that on a summer's evening, a late summer night in July of the 1960s, as Armstrong stepped on the moon, I was near Tupper Lake.
Were you really?
Yes.
Very cool.
All comes full circle.
Thank you.
World.
This show's all making sense now, isn't it?
Totally planned.
Nope. Troy Gayeski of Skybridge joins us next, and hopefully we'll talk about this market. Just off all-time highs at 43.52. From New York City, on radio, on TV, this is Bloomberg.
Businesses are seeing consumers go out and spend. They have cash on hand.
There's a liquidity money story here that's being overlooked with this panic about second derivatives.
We're looking at both those nominal and real yields and recognize that we truly are in uncharted territory.
I think it's really about the Fed. It's really about the Fed getting the economy to full employment.
If we get a very, very strong CPI print, that could unnerve the market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on television, on radio. It is a simulcast, fully staffed today. Thanks, Romaine Bostic, for sitting in. Lisa Abramowicz back, John. And what's so important here is her bond market is enough to keep her awake this morning after the red eye from Athens.
I can imagine her not in Crete, checking the bond market through all of last week. Your 10-year yield right now, Tom, 134, going into CPI. And Andrew Sliman of Morgan Stanley, who was in that opening clip there, talked to us a couple of hours ago, and he said CPI could be really important tomorrow. Okay. And I keep saying this. If I tell you where CPI will be, can you tell me where this bond market is afterwards? And I'm not sure many people can with any confidence or conviction.
I'm going to go simple here. There's a lot of complexity this week, John. We'll have wonderful voices on this, including someone coming up on what hedge funds are doing. John, you know what? It's simple. It's about GDP, the most important number this morning. Michelle Meyer, Bank of America, reaffirming 9.5% this quarter.
Yes, and then what? And that's the question,
and then
Tom.
what? That's
and
the
then
question.
What for next year? 6% this year, 4% next year, 2% the year after? Do you care about the levels or the deceleration? And for a lot of people, it's the deceleration. It's the peak rate of change. Right. It seems to be shaping their views on this market at the moment.
All I care is how England picked their penalty shot, people, and I still don't understand it. Lisa, let's go over to you this morning. Your observation, Lisa, on the American economy when you were not in Crete.
When I was not in Crete and not checking the bond market, I couldn't get over the not yield, the negative real yield yield that went back near the lowest that we have ever seen. The idea here of a near negative 1% real yield, that means what you're getting once you subtract out the inflation. How does this make sense, given the fact that the fear is not inflation, it's just yields going that much lower? And Tom, drawing the distinction between the liquidity story and the actual growth outlook is a very difficult one to parse.
Tough duty. I mean, in Greece, and Francine Lacroix wanted to top you, so she hung out at Daniele there on the Riva, whatever it is, in Venice as well. John, what was different here is this interview mattered. Lagarde delivered on a tone. What shifted after this important conversation?
Guidance. And Lisa is right to point out the asset purchase program. The current guidance is that goes up until March 2022. Do they have to loosen things up there and push it out even more? Do they have to really connect with this market and say the flexibility we have with the pandemic emergency purchase program, that's going to endure beyond, say, the emergency? I think that's some of the questions that this market has got for this ECB president. But as for the move, just in terms of what they did with the framework, Tom, their strategy, the big review, we've gone from below but close to 2% to 2%. That's a marginal move over at the ECB, and I think it speaks to the politics that still exists within the governing council. And the Bundesbank might have had its wings clipped, Tom, but they're still making a lot of noise.
Mr. Scholz, the Finman, talking here today about inflation that they are monitoring. John, let's monitor the data check right now. I'll do equities, red and green on the screen. Futures -8. John, that's better than they were an hour, 2 hours ago.
And NASDAQ 100 futures positive 35, up about 0.25%. And once again, setting the tone for this market, it's the bond market, Tom. Yields are in a basis point or two to 134.27, and it's a 134.27 that gets your attention going into bank earnings. And how many times did you and I ask the question last week? What matters for the banks, the earnings or that number, 134.27 on 10s?
I'll go with both. It's just that simple. They've got to look at both ends of it, and they will, and we'll get more on that tomorrow. Right now, we start strong this hour with a gentleman looking not only at making the relative move in the market, but the absolute move as well. Skybridge Capital has been steeped in moving money to hedge funds, trying to get big return. This year, that's sport. Troy Gajewski joins us right now, whether Italy or England. What is it for hedge funds right now, given the confusion that we see out there? Is it an up year or a down year?
Yeah, so far it's been a reasonable year. I think the most important point that we make to our clients is just like broader markets, it's a first shall be last and a last shall be first.
What's that mean?
What that means is that managers that outperformed last year, mainly because they were long growth and secular growth stories, have underperformed because you had about a 4-month underperformance period there. And managers more focused on cyclical strategies like structured credit or distressed credit have outperformed as economic strength has been very pronounced. So, more broadly going forward, the market or the industry is still overweight secular growth, but a lot of these value plays still, we think, have legs.
Do you think the conviction around cyclical growth stories, Troy, how fragile do you think that is if it exists at all? Given what we've seen over the last week, all it takes to move in the bond market, and it just completely upsets any confidence people have about where they are in the equity market.
Yeah, well, again, sector rotation this year has been more critical than it has in the past. So first 5 months, you had significant underperformance of growth versus value in cyclicals. And so no surprise, obviously, cyclically focused managers, of which there are very few left, by the way, because of the years of underperformance, they had very strong starts. Last month, however, you started to see secular growth reassert itself. And so you do have a very fragile dynamic between those factor rotations, and that continues to keep hedge funds up at night. Do they have the right balance? Are they too over their skis in one factor or the other?
Troy, let's talk about active management. Why do I need active management when the S&P just seems to be doing all the hard work for me?
Yeah, I'll tell you, the Fed keeps pumping in liquidity. We have 16% plus annualized growth rates. Obviously, you guys have been discussing where bond yields are. At the end of the day, active management, it's why do you have it? Part of it is the non-correlation. So you have either stocks or you have bonds. Obviously, bonds look even more so now like return-free risk. Obviously, when yields got up to 1.6, 1.7, you had some upside, but we're at extremely low real return rates now. So if hedge funds or active managers can outperform fixed income and high yield and provide some correlation benefit to equities, that's still the value proposition. It should be easier to outperform bonds going forward, and equities at 22 times 2022 earnings, how much more multiple expansion is left there?
Troy, one of the active decisions has been to go into Bitcoin, and I know that you have been a pretty big proponent of that. And we've seen the Bitcoin's price basically halve since the peak that we saw over in April. What did you do during this period of time?
Yeah, so for us, basically what we did is we trimmed the position in order to keep it from growing further in our portfolios at the end of March as we had more outflows than inflows. And since then, we've rotated a small amount of the capital into Ethereum. We view the market pretty straightforward as, Bitcoin will be the market leader in terms of store value, and Ethereum, at least so far, is the market leader in terms of transaction use. So we wanted a little bit of diversification there. All in all, we have a 9% position size. And when we look right now at the on-chain data, what it's basically telling you is a lot of the strong holders are reasserting themselves and accumulating from those that got into the market late last year. And that is setting itself up for some type of supply shock, very similar to what we had last October, November. So it's going to be a volatile asset, but it continues to be very non-correlated. And we think the risk-reward is now skewed again to the upside.
So, Troy, perhaps there will be future gains, but when it comes to justifying active management to clients, how do you discuss your investment in Bitcoin when it is volatile and sort of argue that this is a reason to go into the fund, even though it is an unproven asset class that does have all of the ups and downs that can be rather unpredictable?
Oh, yeah. Look, I mean, part of active management, again, is trying to identify nascent asset classes that have asymmetric risk return. And again, we're in the non-correlation business. We're trying to generate returns that are differentiated from equities and fixed income. So that's what drew us to Bitcoin initially. And then, of course, if you look at the broader macro environment of incredible money supply growth, still record low, 10-year yields, for instance, the adoption cycle that continues, we think that small part of our portfolio can provide non-correlation and asymmetric upside. And then, of course, over time, we have to manage that relative to other positions as we evolve.
Tell me about earnings season in a long-short structure right now. Tech has resurged here.
Yes.
Are hedge funds exposed to Apple and Amazon? Are they an afterthought from another time and place?
No. So, we've talked about this in the past. Facebook and Google are more heavily owned.
More visible.
Yeah, more visible. Yeah. So those of the FANGs or the large cap mega.
Interesting.
Yeah, are the most heavily owned. And, the view there is that a lot of the antitrust action, when it come to pass, that, if you look at 20, 30, 40% cash flow growth as well as earnings growth over time, you get a very reasonable multiple. Amazon's probably the third in the list. There hasn't been really heavy ownership of Apple. I keep pointing out the fact, if you look at a guy like Seth Klarman, who's one of the greatest value investors that I think any of us have ever seen, two of his largest 10 equity names are Facebook and Google, which says a lot, right? In that it's very rare that you can have mega cap tech stocks be viewed as value, which is sort of a reverse of the whole mindset of the market.
You're an MIT engineer. Were you dazzled by our calculus earlier on the Kármán line and the difference between Branson and Bezos?
I'll tell you,
Did we
Tom,
do okay?
Honestly, I haven't focused on that in so long. It was like a breath of fresh air.
It was
from
a
the
breath
past.
of fresh air.
It really was.
Remember trying to memorize the equations?
Oh, man.
S equals V.
Dazzled wasn't the word, Tom.
So I'll tell you guys a funny story. My first engineering class I ever took at MIT was actually fluid mechanics.
Yeah,
and it literally blew my mind. You went from math, calculus to real engiering. And it was like, oh my goodness, this is really, really hard. So that was the wake-up call.
Was your textbook Sears and Zemansky?
It was not. I don't remember exactly who the authors were, but
John, we had tears. It was just tears.
Yeah,
you're kidding me.
I won't even tell you what I got on my first test score because you'll never have me back on air again. But let me just tell you, it wasn't an A, but I did finish with an A in the class. So,
hey Troy, it's been way too long. Troy Galactic,
it has been.
Good to have you back in the studio too.
Great.
We're doing handshakes, Troy. What are we doing? Elbow bumps?
No.
Hey, that's right. I got to look
story?
over here. Yeah, no, it's really great to be back here, and thanks for having me on as always.
I'm going to pop over to you in a commercial break.
Good
Troy
stuff.
Skybridge Capital.
After you sit at a table of four.
From New York City for our audience worldwide. We'll let that inside joke slide. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Equities 43.53 on the S&P. We're down 6-7 points. We're off by about 0.15%. In New York, heard on radio, seen on TV. This is Bloomberg Surveillance.
With the First Word News, I'm Mariska Gupta. The European Union says it will postpone its push for a digital tax. Instead, the bloc will focus on a broader deal for a global minimum tax that was worked out by the world's largest economies. Several European countries had already implemented a so-called digital services tax aimed at large tech companies such as Facebook and Google. The US was one of the countries strongly opposed to that tax. In Cuba, state-run media has acknowledged the outbreak of anti-government demonstrations. Cuba has faced growing hunger after its economy was hit by a slump in tourist revenue during the pandemic. The government blames the protests on U.S. agents and what it calls neoliberal opponents. And shares of Virgin Galactic are higher a day after founder Richard Branson took a rocket-powered flight into space. That could bolster Virgin Galactic's plan to begin space tourism trips next year. Branson and 5 of his employees rocketed into space from a carrier aircraft high above New Mexico. They reached an altitude of more than 53 miles above the Earth before the plane glided back down. And a wildfire is pushing California towards the brink of blackouts. The blaze is raging uncontrollably across southern Oregon. It's knocked out 3 electrical lines critical to the stability of grids in the western U.S. California is warned of rotating blackouts, and Nevada faces a power emergency. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
From New York City for our audience worldwide, live on TV and radio, alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Quick check of the price action for you. In the equity market, we're down 7 to 43.53 on the S&P 500. We declined by 0.15%. Outside of that, in the bond market, down 2 basis points to 134. What a range last week. As high as 144.57. As low as a break of 125 at 124.79. That took place Thursday morning. Now back to 134.10, Tom, in 2 basis points going into CPI tomorrow.
10-year real yield, negative 0.96. You wonder, John, where that stands on Friday after an eventful week as well. I'd also note out, folks, the dollar, I'm going to call it churning this morning. John, what do we make of euro 118.52?
Let's see. July 22nd. That's what I make of it. I mean, I was surprised that the communication that Lagarde delivered yesterday was the communication she delivered. The ECB president suggesting we will change forward guidance. OK. Good news, I think, for the ECB president. No big expectations looking at the euro, and the bond market's bid pretty much in line with what's happening in the Treasury market this morning. So we'll see.
Maybe Lagarde will go into space with Bezos. That'll make for interesting conversation.
I'll let you sit on that comment on your own.
I will.
And I'll say nothing back.
Right. Gina Martin-Adams with us right now. An important conversation to start off earnings season. Why? Reason one, she's had the courage to be in the market the entire way. She has participated in this bull market. And 2, she's the queen of granularity. What's the granularity of Bloomberg Intelligence tell you right now about the 4 accounting statements?
Yeah, I think it's going to be a really interesting earnings season for a number of reasons. The first is there's just no way we don't have a record level earnings season. We're going to get 65% earnings growth. We'll probably get closer to 80% if guidance is gives us any clear direction, as it historically has. I think the really critical part of this, though, is it's also peak earnings. And you're going to get a lot of opportunities to add to corrections over the second half of this year if margins are any guide. Margins likely peaked in the first quarter of this year. So we're going to see a lot of margin volatility emerge. And it's not just about inflation. It's also about easy comps.
You're a student of history on this. They adapt. How do corporate officers adapt to peak? And then how do they adapt to margins coming in? They cut costs, right?
Yeah. Well, this is the really big key is, can they cut costs any more than they already cut costs? This was an abnormal recession, obviously. Over the course of 2020, we did see extreme cost cutting for some industries. No cost cutting for others. It's really abnormal. Where does the pace of revenue growth settle is a huge question. If you go back to the last recession, you had such an extreme downdraft in revenue in 2008, 2009 that you had this double-digit revenue growth subsist right through to 2012. That's not likely to be the case according to consensus, where we get revenue growth closer to 6% over the next couple of years. How do companies continue to press forward and keep margin growth expanding in that sort of slower revenue growth environment coming out of recession is a really big question mark. And then you've got the financials, which I think is a really important point. The financials always lead us through earnings season. The financials have just almost no revenue growth relative to what you would expect for an expansionary economy. We need to see some power come out of the financial sector to really get us moving forward on the index.
Gina, does this mean more consumer lending, more lending in general to the corporate sector, even at a time where everyone's so flush with cash?
It's amazing because we're not seeing that top-line revenue growth emerge, even though you've seen, for instance, even in the investment banks, pretty strong IPO activity, pretty strong SPAC activity, pretty strong M&A activity. We have not seen capital spending emerge, so that's the core lending environment has been really slow. Even though you've got pretty decent housing market activity, obviously, lending to the consumer outside of housing has been incredibly slow. So I think that the core lending environment is absolutely key. And how much of this is happening outside of the traditional financial sector? How much of it is happening in the private markets, for example, as opposed to the giant public entities that are embedded in the S&P 500 and the U.S. indices?
Gina, given the reopening and given some of the comps that are going to be highly distorted from this, which sectors are most important to watch in terms of earnings to give a guide into how to invest, how to rotate after the rotation and re-rotation that we've just seen?
Yeah, well, financials is number one. That's why I brought it up, is that I just think it's so critically important to really setting the stage for where we're going in this cycle. But I also think that you want to watch the rest of the value-oriented, cyclically oriented sectors. So industrials and materials are really, really key to assessing what the environment for capital spending is starting to look like. Even the energy space, which has been sort of just left out of the mix of spending for a while, given peak oil prices that occurred more than a decade ago. Where does energy go from here? How does the new economy drive energy? How does the new energy platform drive that space is another big key for where we go secularly over the course of the next cycle. So I think you still watch these cyclicals. You know, frankly, there's an embedded expectation of stability in large cap growth. It's not a big shock in any way, shape, or form. We know that we're paying up for that growth. The question mark is where else could things migrate over the course of this cycle in comparison to last cycle?
As you well know, that Bloomberg Intelligence is deeply divided. The Death Star of fixed income analysis is over there. Robert Schiffman publishing moments ago. I'm sure you've not read this, Gene, because you read nothing Bonds writes does in Bloomberg Intelligence. The time is right for Facebook to issue $50 billion of bonds. Do we underestimate the fixed income formation on tech's balance sheet that they can then deploy, to share buyback?
Oh, I think it's an absolute, a great point, frankly, is we saw where we had the concentration of cash is largely in large cap tech and large cap healthcare. Those have been the areas that were the areas of support and stability over the course of much of 2020. The deployment of that cash over time is critically important for where these segments go. Do they sort of fade into a slower growth environment, deploy capital back to shareholders, potentially increase dividends over time? These were the trends that we were starting to see pre-crisis. Those are the bulk of the cash holders on the index, and cash is still extremely high. We still have perilously low buybacks, perilously low capital spending. There's just not a lot of activity happening.
WACC, John's a screen I use all the time on the Bloomberg terminal. Gina Martin Adams taught it to me. Facebook, 1.4% debt.
So much money around, and those tech companies,
I had no idea. I would have said it was
very
8%,
little debt.
12%,
Gina Martin Adams of Bloomberg
Wow.
Intelligence, thank you very much. And Tom, talking of so much money around, an unopened Super Mario 64 game just auctioned for $1.5 million. Lisa's shaking her head as I say this. An unopened Super Mario 64 game. I had that game, Lisa. Believe it or not.
I know.
$1.5 million.
Well, you just start to wonder about where this money goes. I mean, we talk about non-fungible tokens, right? This idea that you can buy the concept of something online and that people are spending millions of dollars on it. You just wonder, is there a bubble in Super Mario games from earlier?
Unbelievable. Alongside Lisa Abramowicz and Tom Keene, I'm Jonathan Ferro, wishing I'd never opened that Christmas present from a long time ago. S&P 500 futures down 5 to 43.55 on the S&P. Vincent Reinhardt of Mellon Investment Management will be joining us very shortly. Looking ahead to inflation data tomorrow, Chairman Powell testimony later in the week, and JP Morgan kicking off earnings season stateside. Yields are lower by 2 basis points to 133.93. Heard on radio Seen on TV, this is Bloomberg. Live from New York for our audience worldwide on TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 5 on the S&P to 43.55, negative about 0.1%. Yields are coming in by a couple of basis points too to 134.27 after yields took a dive last week and had a brief break of 125 early Thursday morning. The line coming from the likes of JP Morgan Asset Management, Mike Bell and others. The rally in the bond market has gone too far. It doesn't reflect the fundamental strength of the economic outlook. Growth is going to stay very strong, and we don't think the market has priced in enough rate hikes in the future. A lot of people share that line, Tom, coming from JP Morgan this morning.
They do. The research is out over the weekend and really an eye towards earnings, not only bank earnings, but what is on after that as well. Right now on the Powell testimony later this week, right now on the Lagarde testimony over the weekend in Venice, Vincent Reinhart joins us. He is Mellon Investment Management Chief Economist and Macro Strategist, but far more is encyclopedic on the research paths, plural, that we have taken over the many decades, leading the research effort at the Fed a number of years ago. Professor Reinhart, thank you so much for joining us. Vincent Reinhart, when you look at the Lagarde-Powell nexus, how are they attached right now?
They share a love of ambiguity and of talking a lot. They'll take every platform they can. And right now, they're both in the position of wanting to reassure markets that they know what they're doing. They have a new framework, and they're putting that framework in place. For President Lagarde, it's only a week old. And that's why you see her and pretty much all the ECB leadership have been out in force over the weekend through this morning.
Vince, the framework that they're putting in place will be tested by data. Does the framework collapse when the data moves against these central banks?
It will be a test of whether they're willing to follow through with what they've said they have. The features, the similarities between the Fed and the ECB are twofold. Number one is they interpret their 2% inflation goal as symmetric. That's news for the ECB. And second, it's outcome-based, not outlook-based, i.e., wait till we actually see it happen before responding. Key difference, ECB hasn't gone Fed-like in saying the goal is an average inflation, unspecified average too. And the one thing where they're most similar is they're unspecific. Central bankers like to pitch a really big tent because that's how they can get their governing committees together, the FOMC and the governing council. And so they use ambiguous words. They'll tolerate an overshoot, but how long an overshoot? How big an overshoot? We don't know.
Well, within the language is unambiguous concern about housing prices, the idea that we've seen a huge boom in that on both sides of the Atlantic. We've seen this from the Federal Reserve as well as from the ECB's Christine Lagarde. What do you expect? What measures do you expect from central bankers to try to tame housing prices? Or will they just say this is a necessary consequence to a policy that otherwise helps the economy?
Well, here's an irony. The ECB wants to add owner's equivalent rent into their price index because it makes it go up higher. So they're actually welcoming that little extra kick to inflation to get closer to their goal. What can they do? There's monetary policy and regulatory policy in the same building. Expect to see them to tighten up where they can in terms of supervisory restraint. If it's a problem they would prefer to address from that side of the building. Right now, their overwhelming concern is a macro one, the level of employment, and therefore they're not going to adjust the setting of rates nor their balance sheet to worry about housing. Fed's got an opportunity when it does start at the taper, though, because it could slow purchases of mortgage-backed securities by by a quicker pace than it could do Treasury securities. That'd be a way to send the signal.
And that's something that I know a number of Fed officials have actually discussed, and people are wondering whether that will be where they start. I want to dig into one thing that you said, which is they know that they're pretty far away from their employment targets. And Tom asked the question earlier, is the Federal Reserve trying to set social policy in some ways with its targets, given the fact that it has such a multifaceted kind of definition of full employment?
So I think the reality is we're putting new labels on old bottles. That's true both at the ECB and in the Federal Reserve. The ECB is going to adjust direct its policy toward climate change. Exactly tell me how you do that. I think in this environment, Chair Powell has actually been at the forefront of explaining what the central bank has always done in a way to reach more people. And the way you reach more people is you talk about their economic circumstance. You don't focus on aggregates. Economists can get apart from the real world by focusing on concepts and numbers rather than people's plight. And Chair Powell's done a good job of reorienting the focus, but it doesn't change what they're doing.
Yeah, Vince, this is brilliant, and they're going to be tested. If we look at John Taylor at Stanford, if we look at Paul Krugman at CUNY, wherever he's got a shingle out today, the Venn diagram of Taylor and Krugman does have a lot of overlap, but that overlap isn't an overt social policy. How do we have a social bank given the heritage from McChesney Martin in 1951?
So I think you're right there, Tom, and it is a fundamental problem in the design of organizations. The Fed is incredibly opaque, right? If you give it a lot of goals, it doesn't have many tools to hit all those goals. And so how will you be able to govern the trade-offs unelected officials are making? Do you really want the interest rate to be somewhat different because Jay Powell feels it's better for climate change this month? Or rather, when you give them more narrow focus, you can monitor them better on how well they're actually doing their jobs.
Vince Reinhardt, what does Chairman Powell not want to say this week? To me, it's just so much what not to say.
He doesn't want to make news. He doesn't want to make your next show interesting. Because if he makes news, then he said something different. He said something that was surprising. He wants to say everything's on course, that they are worried about the pandemic, of course. They're pleased with unfolding economic data, but there's a long way to go.
Yeah.
And but he's also got to reassure you they got the tools in the toolkit. They'll do whatever it takes. So he's got to walk a fine line.
Vince, one thing that he keeps harping on, a number of other Fed officials as well, including Tom Barkin of Richmond, have talked about the participation rate and how low it has remained despite the economic recovery that we have. How do you expect the Fed to explain that, the frictions that seem to be taking a longer than expected time to resolve?
Yeah, they issued this semi-annual monetary report Friday night, and it did a good job of talking about those problems in labor market matching. And Chair Powell talked about it at the press conference, too. Basically, we did the easy stuff last year where people who had positions went back to work when market activity resumed. Now we're in the much harder process of labor market clearing, where people have to find new positions, new jobs. The unemployed people now are jobless. Some of the unemployed people last year had jobs. The businesses were just temporarily closed. And so now the matching takes time, and people frustrated by the match leave the labor force. People who retire don't come back. People go to black market activities too. And people get frustrated, and that's why it takes a while for this part of the labor market this part of labor market clearing, and that's why the Federal Reserve is going to keep policy accommodated for a long time, i.e., at least through 2023.
Hey, Vince, good to catch up to get that perspective, that framework for thinking about things right now. Vince Reinhardt there, the Mellon Investment Management Chief Economist and Macro Strategist. And I think the participation rate, the employment to population ratio, all those things, Tom, just plot the chart. They capture everything Vince has said pretty well. You get that initial fast, quick snap back, and then it stalls. It just flattens out a bit. This is going to take time.
Yeah, it's going to take time, and the information comes along. But John, what I would look at is not the focus on the next Fed meeting, the next ECB meeting. It's a continuum forward, and I'm sorry, they're just slaves to the data. That's all it is. I think there's way too much punditry about it.
And to the calendar, September, October, the focus is on Q4 in this labour market, Lisa.
Yeah, I was struck by an April survey of U.S. workers showing that those who lost jobs in the pandemic, 30% of them did not want to return. That is up from 20% last July. These frictions are complicated, and they will take time, John.
This is the biggest variable, I think, for anyone's outlook in the labour market. Where do you think the participation rate's going to be, Lisa? That's going to tell you a lot about how loose, how tight things are, and what it means for wages and what it means ultimately for this Federal Reserve.
And how do we understand what's behind that friction, right? I mean, is it people deciding to go to a new career? Is it people who would rather get unemployment? Is it people who are worried about the health consequences? Is it, frankly, ambiguity around whether people are going to be working from home or whether they go back to the office, John? All of these are factors.
Yeah, I'm with you. I'm going to run, guys. I mean, I'm shocked, stunned, almost pleased that we got through 2-3 hours with barely talking about football. It was pretty impressive, Lisa.
Why didn't Jack Grealish not kick a ball? I just don't get it.
I knew you had a question. That's why I teed you up, Tom. I don't get it either. Don't know.
25.
Don't know.
What he's been through.
Don't know.
We want answers, John.
I do know that Sacco has a wonderful future in front of him. What a player. What a player. Coming up on the Open, Greg Peters, PGIM Fixed Income, Head of Multi-Sector and Strategy. You do a wonderful job of pretending you know what you're talking about all week, Tom.
I've been doing it.
From New York, the band's back together. This is Bloomberg.
So they say.
With the First Word News, I'm Ritika Gupta. In Haiti, a new twist in the investigation into who killed the country's president. Police say they've arrested a Haitian man accused of flying into Haiti on a private jet and working with suspects in the assassination. The man was identified as Christopher Emmanuel Sanon. Police say Sanon was in contact with a security firm that recruited the suspects. The U.S. infectious disease chief, Anthony Fauci, says ideological rigidity is preventing people from getting coronavirus shots. Vaccination rates are lagging in southern and Midwestern states. Fauci made the rounds of morning talk shows to reinforce the administration's position that the vaccines are safe. And Flipkart has completed a fundraising round valuing the Indian online retailer at $37.6 billion. The company's main owner, Walmart, joined investors including SoftBank in putting $3.6 billion. Walmart bought a majority of Flipkart 3 years ago and has been working towards an IPO for the business. And it is a hopeful sign for movie theaters. Disney's Black Widow scored the highest grossing debut for a film since the onset of the pandemic. The newest Marvel picture took in $80 million in US and Canadian theater ticket sales. Disney said Black Widow also generated more than $60 million from fans paying $30 to watch it at home. And this could be the biggest jet order ever for Air France-KLM. The carrier has started talks with Airbus and Boeing for 160 new single-aisle planes. Air France is looking to expand its low-cost service. The contest would likely pit Boeing's 737 MAX against Airbus's A320 or A2020 jets. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Just being able to unbuckle and then just take off and look out at these massive windows that then the spaceship was upside down and take in the Earth from space. It was something I've dreamt of since I was a kid, and it was completely and utterly awesome.
Sir Richard, up into space. Really, really interesting this weekend, covering Sir Richard and covering Sir Jeff as well, is our Edward Ludlow. He has been at Sun Valley on his way to La Cruces, New Mexico, and leaving today down I-10 to where Mr. Bezos will launch July 20th as well. It is 166 miles, Ed Ludlow, from where you are to where Mr. Bezos is going to launch into space. And there's lots of discussion about who is in space. How do you treat the idea of where Alan Shepard was, where Branson was, and the many miles more that Mr. Bezos will be here on July 20?
The first thing that Richard Branson did when he got off of his spacecraft yesterday was walk onto a stage and be given his official NASA stripes. And they pinned it on him. He had a beaming smile with the rest of the crew. And he was given those stripes because NASA recognizes 50 miles above the Earth as officially space. You go up to 50 miles, you're an astronaut. Blue Origin and Virgin Galactic have been in this tit for tat about the definition of space. Blue Origin says it's the Kármán line, which is the sort of internationally recognized level of space at 62 miles above the Earth. But that is really a territorial issue. It's a geopolitical definition. Richard Branson doesn't care. I asked him that question. He wouldn't be drawn on it. He said, I went into space, and most people would recognize that he did. And if there's a benchmark, I guess that NASA is a pretty good one.
Which is more risky here, a plane and the detachment from the plane up to a higher level, or the rocketry of Mr. Bezos?
Yeah, look, yesterday was certainly tense, but the delivery mechanism has a number of fail-safes. The engine can be cut off at any time. It can glide using aerodynamics pretty safely and easily back to Earth. And at 50 miles, you're still very much within the Earth's gravitational pull. Blasting yourself up into space in a rocket is more risky. You know, if you talk to any aerospace engineer, anyone in the industry, they will tell you that. There are fewer opportunities to abort. The safety mechanisms are very different. You're reliant on a parachute. But either way, Richard Branson had a lot of training for that mission, and I'm told by sources that Jeff Bezos also is going through very specific training for this mission.
And it's an incredible feat. It's a wonderful experience, I'm sure, to be able to fulfill a dream of being weightless. There's also very much of a business case for this. What is that business case in terms of space tourism for the likes of Richard Branson?
Yeah, it's a very narrow product they're offering, right? $250,000 a seat, literally for 4 minutes of weightlessness. I spoke to Virgin Galactic's CEO, Michael Cole-Glazer, about this. He does say there's a market for that. There are enough people out there willing to part with that amount of money. In fact, he says they're supply constrained, so much so that they're not reopening sales. You remember that they sold 600 seats at $250,000 a pop. They also took a big number of reservations at $1,000 a deposit, and they just can't do that many launches. We're talking about tens or dozens of launches a year at most over the coming years, not hundreds. So people will have to wait. But he also says the margins are like software company territory. And I really grilled him on this. I was like, hold on, you're talking about a 40-50% margin. And you know, the cost per flight is around $400,000 to $500,000. But his point, that only comes with scale. And for scale, they need support. They need a factory to build these spaceships. They need some government support or some subsidy from the state. And they also need to get on with it. Remember, Richard Branson yesterday was an amazing moment. You could hear how exhausted he was in that interview, but it took them a decade to get to this point, more than that, 16 years, and it's been very slow progress so far.
You said something I want to pick up on, government subsidies.
Sure.
Are they getting government subsidies, and will they? What is the purpose behind that at an endeavor that is highly privatized fundamentally?
Yeah. Virgin Galactic got a sweet deal for Spaceport America. New Mexico paid $200 million for the facility. You know, they gave them the permits to do it, a prime piece of real estate in the New Mexico desert, 6,000 square miles of restricted airspace, perfect for a rocket, 350 days a year of sunshine. And Virgin Galactic pay $5 million a year in rent. You know, in the scheme of things, compared to their R&D costs and all the money that's gone into that company over the last 16 years, that's chump change. And I spoke to the state's governor at the event yesterday, and she's already eyeing the next phase of the relationship, which is that factory I was talking about to build the spaceships that take the customers up.
Ed Ludlow, does this get us to Mars, to Branson and Bezos, to Musk, all of this billionaire space stuff? Does it get us to Mars, or does NASA look at this as a distraction?
NASA does not look at it as a distraction. As you guys know, I've spoken to a lot of NASA officials in recent weeks. We have this big space special coming up later this month. They see it as complementary. They want people to be excited about space. But let's be under no illusions. What Virgin Galactic is a very narrow definition of going into space. What SpaceX is trying to do is much grander. They are the provider of choice for servicing ISS. They are the provider of choice for most satellite companies, companies that make small sat, and they are, from a technology standpoint, the most advanced to going to Mars. Now, Blue Origin want to have some similar ambitions in terms of interplanetary exploration, but they're a little bit distracted right now because just like Virgin Galactic, their founder and another billionaire plans to blast himself into space first before they get onto that other stuff.
You know, I know, Ed, that you're going down to Texas in a 1966 Ford Thunderbird. I mean, it's the Ludlow way. I just want you to know that as you're moving down to the Bezos Cape Canaveral there, that you got to be singing Jimmy Buffett's "Hello, Texas." I mean, you just got to.
You actually can't see it, but I've got a brand I won't name pickup truck over my left shoulder, so that's certainly
awesome.
not the case, Tom. But yeah.
Why did we know that? Ed Ludlow, thank you so much. It's just romantic, folks. From Sun Valley to Las Cruces that I can't pronounce, on down I-10, somewhere past El Paso to Texas for Mr. Bezos, July 20 as well.
Can I, Tom, I'm struck by this idea of the public-private aspect of space exploration. The idea that the public sector does need to get behind this in some capacity, that there is an intricate connection between the two, yet it's really being driven by the private sector. You asked the right question. Will these private companies get us to Mars? Are they going to be at the forefront of the next scientific developments that really were fueled in the 1950s, the Sputnik, the whole, Cold War product that really led to space travel, whether this can be generated by the private sector today, Tom?
Well, it'll be interesting in the private sector, but to me what it is about the physical risk. These people are really testing risk. There's a complete underestimation about the risks involved here in manned space flight, as we learned the hard way across Mercury, Gemini, and Apollo as well. Lisa, let's get back to economics, finance, investment. Did you mention there's a 10-year auction coming up?
Why don't you talk about it? I know you're fascinated by it. Why don't you give us a preview, Tom?
Well, I mean, the preview is what? Does anyone care?
I care, and I think that people are looking to see whether we've seen sort of the peak demand for treasuries. Doesn't look like it, given the fact they are lower yet again.
Please stay with us through the day and the week. Balance of Power today. A wonderful show. Jacob Kierkegaard will be there. I'll be there as well. This is Bloomberg.